Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live on this Wednesday morning. Getting ready for a busy day on the network, busy day across the markets, we hope. Joining me is our senior market economist, Tracy Shuchart, otherwise known as Shy Girl.
Good morning, all.
And of course, joining us on the big screen, he always gets the big screen. We're never on the big screen. Is our senior market strategist, Jimmy Cagnina. Good morning, Jimmy.
Good morning, Deli. Good morning, Shy. Good to see you guys. It's a glorious, glorious summer day on the island.
Oh, look at that. Jimmy's starting off with positivity again. He's the best.
I know.
Shy, I want to talk about the dollar to start off the day because yesterday that was the story that was, I think, for the first day of the month, the most important one because you started off with weakness. You had a lot of strength coming off of the weakness in the dollar, and then the dollar got stronger. Was there any news? What's going on there?
So, I think a lot of this has to do with uncertainty around what the Fed may do, uncertainty around tariffs. Investors are not sure the path the U.S. is on. We've got this tax bill. And so, they're very short the dollar. That said, positioning is overly short. So at any point, we could get, a snapback if we get a move higher and people start getting squeezed out of that short market because it's overly overloaded short.
It's interesting. We've got Jason Shapiro today for Credit Market Report. We'll see what he thinks maybe about some currencies and how that looks for the ones going against it, because I go right away to you, Jimmy, because if Shy's saying it's overly short, do you notice anything in overly crowded longs in any of the major currencies against the dollar?
Not really. It's been pretty systematic behavior between the major currency pairs and the US dollar. Japanese yen's always kind of an outlier. You kind of look at that when kind of think about what that's doing, but they do march to their own drummer a little bit, but generally, I think the macro story is, what Shai is saying is nailing it right there.
Yeah, and when I think of the first day of the month yesterday, I think it's set a decent tone for what I expect to be the rest of the week. The rest of, the week it's a shortened week, but I think the rest of probably the month until we get some clarity on tariffs. By the way, is the July 9th my birthday? Still the day?
Well, that I guess that depends on who in the administration you want to ask. Trump has gone kind of back and forth, ping-ponging, where he said, the 9th is it, and then he said, well, he could extend it if he wants. Bessent said they hope to have things wrapped up by Labor Day. So we don't really have a lot of clarity. We have, several things in the works. So I expect they'll have some sort of framework for a lot of these countries, probably by the 9th, and then they'll hammer out the details later. Markets really didn't like yesterday when Trump came out and he is kind of upset with Japan and said, maybe I'll just slap a 30 to 35% tariff on them and we'll just leave it at that, which is concerning for them, obviously, because U.S. is their number one car market.
Yeah. And so we wait. I think that's what the market's telling us. Let's face it. The market's due for a consolidation phase. We're talking indexes here. I think it's more of a rounding out than consolidation. I don't think the bull trend ends here. I don't see it ending just yet. But I do think that when I look at the charts, I start to see like this rounding out pattern where it's like higher high back in the range, maybe a lower low back in the range, but still kind of grindy higher. Because I just don't see, as we talked about yesterday, money just flying in up here. You're now getting into the heart of summer, 4th of July. You've also got tariffs really coming in, soon here. Whether it's the deadline of July 9th or not, we should be, I hope, closer to the end than we are still to the beginning, or we're in the middle.
Yeah.
I'm not sure what inning we're in because I don't think anyone knows what inning we're in.
Well, what's really interesting is Barclays came out with they have a rational exuberance kind of gauge, right? And that phrase was coined by former Fed Chair Alan Greenspans for when prices exceed assets' fundamental values. And so I guess that has swung into double digits for the first time since February, basically saying that we have reached extreme frothiness in the market.
Yeah. Well, I mean, TBD on that. I mean, look at the market.
Oh, yeah.
We could have said that 1,000 points. I know it's funny, but I mean, it's always interesting hearing what other people are thinking. But, a couple things. First off, I didn't say good morning to the chat. Good morning, chat. Of course, we've got Engineer Bear, we've got Paulie, we got My Serona, we got Infinity Works, Rally, Cedric, Andrea, Grote, T, Trading, Carlos, John, Ferrieri, Trading Poker, my boy Rob, Shubham. Good morning, everybody. Good morning, Mern, Frim. I'm the worst. Listen, if your name is, if I butcher it, don't worry. Look, I got my Jimmy Choo glasses. I'm like incognito.
I don't know. I was going to say, you and Pax are starting to look really similar. He's got the hair going. You've got kind of similar glasses to him now. I don't know.
It's unbelievable. I know I made yesterday with Stowe and XYZ. I did something on X where I was like, I responded. And there's a dog doing a big wink in the bottom. I go, what the hell is that? I'm like, I didn't put that in there. I go, I'm getting like Pax now. I think I hit it by accident on the phone. Oh, my God. Here we go. Good morning, Harry, Angela, Mark, Carlos. A couple things. I want to get into the markets coming off of the first day of the month, too, because our first day of the quarter, got to include that in there. It gets – I'm a big – believer in the first day of the months, first day of the quarters. They help set the tones. You get a look as to what people have to do. I think that's the number one thing I always take away from the first day of the month, first day of the quarters, is because when flows come in, they come in and they have to do that, right? I mean, that's why I like the last day of the month as well, because it's more about what people have to do. And I think the market becomes more transparent. Not that it's ever not transparent in those moments of like, what are the bigger people in this business having to do? And I think the metals continue to remain the story. Even with the dollar weakness starting off yesterday and then dollar strength shy, when the dollar came back, first thing I looked at was gold. It's funny. I was actually scalping a little bit of it yesterday. Production caught me. I had the screen share. They're like, either most of my jobs they go tight. I got stopped out with Merit on one, but then I did catch a good winner in gold, made some money in it yesterday, and it's like I'm kind of feeling my way into a swing for gold at the moment. But I do think that metals remain the story. I like gold, platinum, silver still to be the strongest markets where the most dominant trends are. Platinum this morning at 1404, up 3.5%. Silver's up 0.25%. Copper's up 0.5%. Gold is flat, but gold had a big day yesterday. And again, despite the dollar coming back, gold stayed bid.
Right, exactly. And that's what is really important. And we're starting to see this inverse correlation between ES and the dollar kind of creep in right now. So if the dollar moves significantly higher, we could see a pullback in equity markets. So keep an eye on that. It's not a one-to-one correlation, but over the last couple of days, it's been more correlated than not.
Yeah. And then last thing I want to talk about is oil. It's finally got back above the 66. It's up 1.25% this morning. I've been looking at that. It was a signal that I was getting to be long crude. But again, I have time as part of my signals, and the time dropped off. It's no longer a buy for me. But crude oil up 1% shy. We talked about this with Ellen yesterday, who was a fantastic guest. I think the supply remains the story of everybody we speak to on oil. Any news overnight, oil's up 1%.
So no news on oil overnight. We did have crappy yesterday, showed a very slight build. We'll see, we'll see what EIA says today, obviously. But not really any news. I mean, we were consolidating for 2 days straight, so it wasn't surprising that it moved one way or another. I mean, literally, we were in such a tight range for
After
2
that
days.
huge move.
It was incredible. So,
Yeah.
So it's not surprising, but no actual news on the oil front. Also interesting that oil is moving higher with the dollar moving higher. Not that they're a one-to-one correlation either, but crude oil is also correlated to the 10-year yield. So not a one-on-one. So we're seeing yields move a little bit higher today. That could be, causing a move in crude as well. But again, it's not a one-to-one correlation.
Yeah, back to you, Jimmy. Bond market. I have you touch base on there, down a touch this morning across the curve. But I want to know your initial thoughts, Jimmy, coming out of day one flows. Any nuance you saw yesterday?
I mean, right, with respect to the 30-year Treasury bond, I mean, we had this nice orderly rally. Yesterday, if you just look at the daily candle, yesterday we have what I like to refer to as a turnaround doji. It doesn't always work this way, but when I see it at the top of a trend like this, just from a technical point of view, I'm looking for a retracement back down, and that's what we had today. This is a relatively big candle today. There's no wick at the bottom of today's candle so far, so sellers are in charge, driving us back down to that session, that anchored VWAP past the ADMA. So, this is an interesting kind of turnaround. We'll see if it continues and we get any kind of retracement back down. Maybe we'll end up with a 38% retracement right now. But this market is reacting, and I'm wondering how much of this reaction is related to our big beautiful bill. I mean, it's out of the House Rules Committee this morning, and are we gonna push it through? Is there going to be a war going on with this thing because it's not in the same shape as it is when it left the House the first time?
Any updates on this, Shai?
So no updates on it. It passed yesterday. It passed the Senate by a tie vote from J.D. Vance. It was 50-50 and moved to the House. And now you have factions within the House that are not really happy with this because, again, as Jim said, when it came back to the House, it looked nothing like it did when it left. And so I think they're having trouble getting votes right now, and everything is still kind of up in the air.
So do we have any expectations of this being done today? What's the chatter out there?
Well, I highly doubt it.
Highly doubt it. Well, let's talk about what we know will be today, and that's ADP. We've got some data this morning. Quick preview on that, Shai. That's a few minutes away.
So we have ADP. That's 8:15. Obviously, that's before 8:30, and then 10:30 we have crude inventory. So light on the data, but ADP could be a market mover. Again, all eyes are focused on the labor market for any kind of weakness right now. We did have challenger job cuts, which was kind of mixed. It was down 1.6% from May, but kind of essentially flat from June a year ago. But up 39% from a year ago in Q2, but down from much higher levels in Q1. So you can pick your choice how you want to look at that data. Yeah. It wasn't really market moving when it came out, but again, ADP non-farm employment change will be important. It'll be a preview of kind of what non-farm comes out tomorrow. And we also have jobless claims also tomorrow because of the holiday. So we've got a double whammy in the morning tomorrow.
Yeah, I won't be here, but Donnie is going to be in here. That's DCP Cooks, my man from the trading floor. Him and Jimmy are going to have a great discussion. Probably nobody I know knows more about the bond market than him. He's fantastic, and look forward to watching you guys with Donnie tomorrow morning. But today, guest, we're going to be talking ags. I know we're waiting for this data to come out, but quick preview of the guest for today. I'm excited to have Garrett on.
Yes, we have Garrett Toay, and he is founder of NinjaTrader Talk. He's been in the agricultural business forever. He works with farmers. He's a trader. He knows pretty much everything about the ag markets. We don't really talk about the ag markets a lot, but they're very tradable markets, and so kind of want to find out on the macro level what's going on in the ag world, since these prices have been really depressed, and see maybe what kind of opportunities there are in that market as well.
Yeah, especially we head into the 4th of July. I'd be curious to see. Inflation always comes up around these holidays. What's happening with inflation? I'd be very curious to see what Garrett thinks about the overall commodity space. Remember, it's the space that impacts all of us.
Right? You got to eat.
I know I eat. So we're going to have the bond market up here. I'll put this up on a 3-minute. I'll watch the bond market first, just because, again, on data points, everybody historically, I mean, I would say besides maybe the first 10 years of my career, the last 15 plus, a majority of the time I was either trading 10-year or 30-year on data points. I just think they're the best markets to trade on data points. I wish more traders would look at these markets, especially on days of data. I mean, 10-year, 30-year, probably 10-year for more people. But they trade good on data. Like if they're good or bad, usually a decent response, and you get some
So
volatility.
ADP employment change was negative, minus 33,000, expected to plus 98,000. Prior was plus 37,000. So we are seeing weakness in the labor market according to this particular metric.
Yeah, look at that. I mean, a little bump higher in bonds. Let's go to 10s, assuming the same thing. There you go. Yeah. So overall, what does this mean, Shai, for the Fed?
Well, I mean, the Fed's going to look at this. Obviously, it's not as important of a metric as non-farm, but this kind of is a prelude to non-farm. Jay Powell did mention yesterday when he was at that meeting in Spain that, you know, they were seeing some weakness in the labor market. So all eyes are going to be on the labor market from here on out. This could change the trajectory of when they cut. We know Jay Powell doesn't want to cut in July, but if we start seeing real weakness over the next month in the labor market, then the possibility does raise for a cut in July.
Got it. All right. Well, more to tell, and tomorrow's data is going to be important as well. But before we get to all of that, it's about that time. Take it away, Jimmy, for this morning's Edge Report.
All right, let's start with the Euro FX. We talked a lot about the US dollar. This is a daily candle chart, very orderly rally, and this has been going on for a long, long time. All the moving averages are sloping upward nicely. The 8, the 21, the 50. Stochastics are still way over 80. Again, though, just like the bond market, we saw that chart a second ago. This is kind of another turnaround doji. Now, it doesn't always work that way, but it's on my radar screen, especially today with a little bit of a sell-off. So I'm not saying it's time to hit the sell button, but I do have my eyes on this candle. We'll see where we close today in the Euro FX. Just intraday, we do have some targets all over the place. For the bears, we definitely have a jacks level at 1.185. We have the pivot up at approximately 1.1859 to the upside. We're trading firmly below that VWAP on the session today, so sellers are in charge. We have a little bit of a bump up on that candle on the news that Shai just mentioned, trading right around that S1. For the bears, we do have that 0DT put support at 1.18. And then right below that, we have that S2 level as well. And that number, folks, is 1.17905. Let's shoot over to the Bitcoin. The Bitcoin's up today, almost 2%. Let's start with the daily chart. We're kind of in this little bit of a consolidation range over the last 5 days, with the bottom of the conversation really framed by an anchored VWAP that I had started all the way back on the 23rd of May. And then, we're talking 105, 800-ish, give or take, on the support side. On the resistance side here, we have a longer-term period of resistance right around that 108, 900. You could round it up to 109 level. You can see we tried to wick in it a couple of times. Today, nice green candle. We're above that 8 EMA again, as we've seen time and time again, actually. Intraday on the Bitcoin, we do have forget about the volume profile. It's a little bit wonky today, but nice orderly rally. Again, we're trading above that session VWAP. We have a lot of price separation. It's a regular little retracement happening right around that JAX 1, which is at 108,000. And then, there's some targets above, including the one-day max, which is pretty tight. But really, the real target on the upside here is this R2 in my mind, and that's approximately 109, 155. On the downside, there's all sorts of blind spots and JAX levels that have been provided to us from our friends at Mentor Q as well to keep an eye on, particularly the JAX 2 level at 107 even. And the last market I kind of want to throw up really quickly here in honor of our new guest, we're going to look at the corn market. And, just a daily chart, this is a nice sell-off that we had, really that started on the 16th, this short-term sell-off here. And now we have kind of a little bit of a support brewing right around 403.5. So this is, my rectangle is right down there saying, okay, a little bit of support here. We keep trying to break through it. Moving averages are sloping down pretty nicely. Remember, this will open up again at 830. They have a weird kind of break here in the grain sometimes, but we do have some Jax levels as well. We have Jax 2 up here at 405 and Jax 3 at 404. We're right up there now, right now with that VWAP as well. Remember, we did trade overnight, and then S1 is way down here at 4.01 for corn. That is today's Edge Report. Back to you, Deli and Shai.
Thanks, Jimmy. We are now joined by our guest, Garrett Toay from Ag Trader Talk. Garrett, good morning.
Uh-oh.
He's on mute. It's okay. We'll get you here in a second, Garrett.
There we go. Sorry about that.
Hear us?
Yep, I can hear you. Can you hear
no
me?
worries. Good.
There we go. Sorry about that.
We can hear you loud and clear. Good morning, and thank you for joining us today.
Yeah, good morning. Thanks for having me on this morning.
So let's talk ags. You know, it's perfect timing. Heading into the 4th of July, all of the major networks will be talking about whether we have inflation or we don't have inflation. If you look at what's happening in a lot of these softs, they've been just trending lower. Not sure how much that's impacted prices that people are seeing when they go to the grocery stores, but nonetheless, give us the landscape right now. What's going on in the ag space, pricing-wise?
Well, it's kind of it's interesting. I mean, the inflation trade, while the official numbers are fighting it, in the ag space, it feels like in the inflation trade is over. It really feels like with the exception of markets that have supply issues, mainly like the live cattle market with beef. We're back into a sell commodities, buy equity type market. That potentially is driven by, and Shai will say, the OPEC Plus decision to increase oil supplies. The rising tide lifts all ships. A sinking ship, potentially pulls everything lower. So, as you mentioned, I mean, these ag markets are trending lower. The exceptions being the soybean market, which is supported by policy with this big beautiful bill, renewables. That's kind of driving the boat here as far as soybean oil, and that's keeping soybean supported. But the general trend here is commodities feel like they want to be sold on a macro sense. Then when you get into the nuances of the commodity markets or the ag markets in general, U.S. weather is benign. There's really, we're getting in this July 4th time period. We're getting into pollination for corn. There's really no issues out here per se. We've got a relatively large Brazilian corn crop coming online, so we're trading the seasonals, and as this is probably the way it's going to go unless something changes in the last half of this growing season.
So, question for you about pricing of ags and where they are that we see on our charts and everything that you just talked about versus what we're really seeing in the stores. Because it's funny, like with crude oil, we understand the refineries, but also we look at crude oil. When crude oil upticks or downticks, everyone's like, go fill up your tank. But when commodities drop or rise, it seems like they always stay high at the store. Why is that?
It's just we're the hangover from the inflation from the COVID year has just been stretched long. It's just been stretched out longer than what we expected. You look at the most of the supply chain issues that we had during COVID with the factory shutdowns and whatnot. We've worked through that, but you're right. I mean, it's we do not see a direct correlation. In fact, I mean, we're still seeing, boxes of cereal, whatnot, that are extremely expensive, and some of that is just, corporations chasing profits and trying to keep margins up and trying to recoup what they lost during COVID year. But I don't have a good answer for you why it's taking so long to come down.
And, if I look at charts, well, particularly wheat and corn and soy, I guess, we are well off the highs of 2022 and well into, coming down into the very lows here. So what is the pain threshold for farmers? When do farmers say, well, I can't produce anymore because I'm not making any money? Or are there enough subsidies to help with that?
The with the Trump administration, he has definitely been more willing to throw money at farmers. Obviously, we're there. I think. I mean, we just had a stocks report on June 30th. We've been trying to understand this corn market for 6 months. If we back this thing up, we go back a year. The corn market right now is acting exactly the same way it was this point last year. And then we got into harvest and we got sub $4 corn, and everybody and their brother makes money from an end user standpoint, sub $4 corn. So we built a massive demand base, sub $4 corn. So we rallied, we built this base up, and we finally, when did it react? It was the January, February timeframe of this year. And we rallied up to $5, $5.15 levels, and it essentially bailed out the producer here and allowed them to give sales. That being said, after that rally, the USDA kept cutting demand, kept cutting carryout, increasing demand to the point where we're at a 1.3 carryout right now in old crop corn. And, this corn market from a basis standpoint, from a spread standpoint, should act a lot stronger given that USDA carryout than what it actually had. And so that made some of us, myself included, think, well, maybe that corn crop last year was underestimated. The crop was bigger than what we expected. But the stocks report that happened on Friday showed us that no, I mean, the farmer just continues to sell corn. The commercial continues to sell corn. The farmer's selling soybeans. And to me, what that tells me is that the farmer is it's a cash flow issue. And that's where the bullet hits the bone here, is that even though prices are off those 5.15 highs that we had in January, February timeframes, the farmer needs cash. And even though prices are at these levels, the one thing that you mentioned, that these retail prices aren't coming down, the farmer is being squeezed. It's on fertilizer prices between the geopolitical tensions. Their profit margins are still, reflective of that COVID year when everything was still supply. We're trying to grow a corn market that's off those 2022 highs with input prices that are still 2022 levels, and that doesn't work.
And how much do you think sentiment plays into this market where everybody was kind of worried that China's never going to buy from the U.S. again? Is that playing a role kind of in why these prices are so depressed?
Well, yes. I mean, China's been out of the market. Let's talk tariffs and let's talk trade deals. The situation for China on this trade war is a lot different than it was the first trade war. The first trade war, in order for China to avoid the world market in grains and commodities or avoid the U.S., they depleted their stocks. They used their domestic corn stocks down. They used their domestic wheat stocks down. So when, during negotiations and President Trump came and said, hey, you're going to sign this deal and you're going to buy X amount of commodities, you're going to buy X amount of this, China said, sure, we'll do that because we have to replenish our stocks. They're not in that situation that they are, they're not in that type of situation that they now, because the trade war, they've got their own economic issues, obviously the housing crisis, that sort of thing, but they didn't deplenish their stocks. That being said, China did have a corn auction here, a reserve corn auction. It was not well received. Just the day before yesterday, it wasn't well received. But if China's auctioning corn, that means at some point they will have to come into this market to replenish those stocks at some point. From a betting basis, most likely, I think the market's assuming that's going to be Brazilian corn. But if China does step in, it doesn't matter. If China steps in and buys U.S. corn, Brazilian corn, it doesn't matter. It tightens up the world S&Ds, and things will get very interesting.
And as if we look at this as traders, because we have a lot of traders watching this network, what kind of levels should we, look at as, possible buy in the market, or what kind of signals should we be paying attention to where, we could maybe see this turn around?
Right. I can't. I'm a broker, so I mean I can't give specific levels because I'm in a regulated industry. But I will say that look at your cost of productions, for producers, and if you get into that, and it depends on the situation. If we turn off hot and dry from this point forward, then we've got a counter seasonal year. The market's extremely short corn. They're out of position and they would have to cover. But when I advise my customers, when I advise my producers, if I'm a cattle feeder and we have sub $4 corn, either cash or futures, that's below cost of production. And from a cattle feeder standpoint, I want to go in and look at booking my coverage, my feed needs for an extended period of time, if it's 3 months, 6 months, that sort of thing. Typically, at this point, we've got a lot of potential for this crop, and that's where it is. We are getting in the seasonals, where it's just, if we don't have a hot, dry pollination window, then we're probably going to trend, these grain markets lower into September timeframes, where we tend to bottom around harvest and then rally from there. So the question is, last year we traded, 380, 375 type level, sub $4 corn, with the September contract here, just right on, right at those levels. I would just be very careful about bottom picking right now because of the time of year. I'm on record saying that, we don't bottom the corn market in June. We don't bottom typically in July. In fact, there's only 3 years where we've bottomed the corn market in June. And one year was 1993, which was the flood year, and the other year was 2010, which was the flash drought, and it quit raining in the month of August, and it turned off hot, and we destroyed the corn crop. So unless something like that happens, we probably are going to try to trend lower here, over the next month or two.
Well, that goes back to why we have futures and expiration. It's a physically delivered product, right? And so you try picking bottoms near the end of an expiration, and there's no demand for it. If anything, it could do the opposite, even if it is below production cost. Have we seen this before, Shai, in other markets? I think we have. Garrett, the chat's talking a little bit about coffee, maybe talk a little bit about cattle. I know maybe you don't follow coffee too much, but kind of we're big consumers in this studio about coffee, mostly me. But just curious what you're seeing outside of corn and wheat. Go ahead.
Sure. I have to say that the coffee is outside of my view site, but I will say on cattle, right now, this cattle market is a long-term play. The cash market is the dictating factor. We have record high futures prices. We're just off of record high futures prices, but cash is still strong, which shows us, that the consumer is still willing to buy these levels. Now we've had a bit of a setback here this week because we've got this screwworm issue out of Mexico, and we closed the border. I'm not sure you realize how much cattle we do bring across the border, feeder cattle, and that tightened the supply of an already tight U.S. market. So the market to me feels. I'm still friendly cattle because the fundamentals show that we are not, rebuilding this cattle herd whatsoever. But the other aspect of it is again, we are at a level now where you're starting to see where protein prices, the live cattle markets are supporting the hog markets, the alternative meats, the pork, the poultry, those other markets are being supported because beef prices are so high. So that's one thing where the consumer is looking for cheaper alternatives here. But so that's one thing, maybe the hog markets are in the middle of a fairly decent rally, but they should be supported here while these live cattle prices are at just off of all-time highs.
We've only got about a minute left, and I can't have you here and not ask about eggs. Eggs have been the topic of conversation for a while now on mainstream media and all the households as well. What's the story with eggs?
The story of eggs is the reproduction cycle of an egg, and that's one thing that policy, that's been a big running point with President Trump. We imported a ton of eggs. The life cycle of a chicken is a lot shorter than it is of a cow or a steer. If you're going to replenish a cattle herd, it's going to take you at least 18 months from start to finish breeding the cow, having a calf that's marketable. A chicken, it's much shorter. So egg prices are coming down because we've been able to fill these gaps between imports and reproductive here. Plus, it helps having a change in policy where the avian flu was a big driver here. We were culling a ton of chickens whenever we'd have an outbreak, and we're finding different ways to address those situations.
Garrett, absolute pleasure having you here. Wishing you an absolutely wonderful 4th of July. Everybody go and follow Garrett on Twitter. That's going to be Ag Trader Talk. We'll put the link in there. Check out what he's doing. Thank you so much for joining us today.
Thanks again for having me. Really appreciate it.
All right, Jai, great insight as to what's happening inside, commodities. Again, we've been talking about it more and more here, Angie, Garrett, and it's been coming up in other conversations. But I think, a lot to take from it. But the one thing is, if you're out there trading ags and you hear people like Garrett talk about like under the cost of production and you get near a physical delivery contract expiration, understand that doesn't mean it's going to rally. I mean, That's like number one. I mean, that's what happened with crude oil. People don't understand that. As I said, it's like crude oil. Yeah, sure. When you have a physically delivered product and it ended up going negative, it was because no one could take it. And so now all of a sudden everyone's going, well, I don't want to physically take it. And you get that into an expiration. And so a lot of weird things can happen around expirations in commodities. Definitely. Make sure you know
what your expiration day is. And on NinjaTrader, literally there's a column that will say what the amount of days to expiration. So I encourage anybody that's trading commodities to keep that up at all times so you do know when that contract is rolling. They will get you out of the contract before expiration comes, but just to have an idea of when the contract is over.
Yeah, exactly. All right, Shai, great stuff. We'll see you in chat, and we'll hear from you later with crude oil numbers. Thank you so much.
Thanks.
All right. Let's bring in Pharm. Let's have a chat with him. Well, what is this hat? Oh, is that the hockey team?
Baseball.
Baseball. Is that a baseball hat? Yeah.
It
the
is.
Diamondbacks, that's their new logo? That's how long it's been. God, it's...
The Serpientes.
I guessed it at least. The Serpientes. Well, you heard Garrett talk a little bit about commodities. Any initial thoughts coming off of what he said? I think specifically tied to inflation, which is something you and I talk about quite a bit.
Yeah, I mean, when it comes to trading softs, I'm like the world's worst trader in softs. So, anytime I've tried to long wheat, it just goes very, very poorly. So I kind of try to stay out of that. But, it is interesting to see, to monitor, right, in terms of inflation. And, really, I mean, they just never performed that well, really. I didn't feel like, at least as long as they should have, especially with the war in Ukraine, we just stayed, in the basement for so long. So keep an eye on them. But I cannot trade them. I'm terrible at it.
Yeah. They're not the easiest trade for sure, and there's a lot that goes on with, again, expirations and everything that happens inside when you're getting with commodities. When you get close to expiration, it's always something just to keep in mind, everybody, if you're out there trading them. Let's take a look at markets now. Let's go to my charts. This morning we had ADP. You had a market that had a little bit of a pullback. I don't really think much of it from ADP mattered much, I should say, get my words right. We've been trending down for a while now. This is just a 3-minute chart here of the NASDAQ. We'll pull up the S&P as well. So coming off of that data, you saw weakness just continue into what we've seen in the overnight session. And weakness, it's really kind of a loose word. I mean, we've been trending lower from the highs. We're only down $5 in S&P, 65 in NASDAQ, up 4 in Russell, up 7 in Dow. And that's the first thing I want to talk about, Pharm. Before I kind of get a little bit deep into what I'm looking at for today. The divergence yesterday, thoughts on that divergence that you saw yesterday between Dow, Russell, and NASI?
Yeah, I had a lot of complaints about me breaking the market by buying rusty calls. A lot of people were just not happy about that,
Yeah.
but it was wild. The extent of it, right? And it looked like big, beautiful rotation, I suppose, out of the Qs and into the Dow and some beaten up names. I don't know. I kind of feel like some of that was deleveraging, degrossing across books, because if you looked at like some of the absolute worst performing stocks that nobody has wanted to own for any reasonable amount of time, like your Campbell Soups, your cereal brands, what is it, General Mills, basically all the stuff that I bought in my IRA within the last week or so because it was so busted up and I'm a boomer and it had yield, like just went crazy. And I don't know, that doesn't read. I mean, those huge candles, like Pfizer, nobody wants Pfizer. It's going to zero. Just monster candles. So it felt like there was a little bit more to it than just rotation to me. And maybe that's wrong. But we see this a lot, right? And that's part of the thesis for why I break the market when I buy, IWM calls, is because one of two things happens. You start to see the NASDAQ get a little sleepy. And so that was part of the read on rotating into IWM calls. And one of two things happens, right? You get a deleveraging event, which generally means the NASDAQ is sold and the Russell is bid because there's a lot of funds that short the trash, right, against the long book. Or you get some rotation. And honestly, either way usually leads to a local high. So that's kind of where part of the joke comes from about me longing IWM calls. It's not a joke. I'm terrible. And the fact that I made money at this time, like, I don't know, Deli, this is a problem. I don't know what's going to happen in this scenario. So it was wild and it was extreme yesterday, I thought.
Yeah, when you look at it for the day itself, I think it was a little extreme. But because it was the first day of the month, I take it with a grain of salt. And here's the reason why. Because when you talk about a rebalancing, and that's really what I think it comes down to, right? When you have the first day of the month, first day of the quarter, where it's like, okay, I mean, think about it. You're balancing a book, right? You look at it and go, well, I've been long a bunch of these. Do I sell some of these? Do I buy some of these? How do we rearrange it? The market has changed from one quarter to the next. A lot of that gets done towards end of quarters and beginnings of quarters in terms of positioning. So my thoughts are, I think that divergence dwindles over the next coming sessions and we get back into a tape that we've seen. We're probably led by tech one way or the other. I just think for now, again, coming into unemployment, coming into the 4th of July, coming out of end of the month, end of the quarter, it makes sense for me to see that. Not probably as broad of a divergence as I probably would have anticipated, but nonetheless, it's not a total shock. And I think what I look at now in the market is, so let's peel that back. What does that mean? What I think that means is you have a broad bull market here. Because anytime the market goes higher, most of the time it's going to be led by tech. I mean, even since the mid-90s when I started, technology, right? It's what it is. I mean, it's going to lead us higher. It's going to lead us lower. The big names, the big caps are where it's at, and that's just not going to change. I mean, I think with the Dow theory kind of people, that's been long gone. Although I think it still has some validity. I just think ultimately when you look at markets, we're going to be led by technology, but when you see rotation into other sectors and it's to the upside, I just think that overall that's a bullish tone for the market. And that's a time where you're going to see markets probably consolidate, stabilize, and try to go higher again. I mean, that's just what I've seen in the past, and I think it's what we're setting up for. So when I look at Dow, Dow is going back to Feb highs. You're going back to look to see where this, where these peaks are in the Bollinger Bands. The Dow might be leading us in the short term higher, but it is not, again, the market leader. It is a rebalancing, and it's the same scenario when we get into the Russell, where we have this same type of thing where you have like, okay, let's look at the Russell. I wouldn't be surprised to start heading towards these recent highs, which is this peak in the Bollinger Band. To me, I just feel like that's probably the targets for Russell and Dow. The pricing there, I'll give it to you, is I think 23.30-ish, and Russell's probably headed towards that. We go back to Dow. I think Dow is likely headed back towards 46 and change, low 46,000 area. And again, it could be bumpy for NASI along the way there because they're already at levels that we look at. I like to compare indexes on the same technical indicators across the same time frame and see where they are on a relative basis. I've been doing this for my entire career. It always gives me perspective of what's happening within the tape. And again, if you're trading Dow, you're saying, okay, I want to be more on the bid. If you're trading Russell, I want to be more on the bid. Excuse me, did I just say that? I did say it. But even though Pharm's long calls, it's okay. It still might want to be on the bid. And now you're looking at S&P and NASDAQ. They're going to be rotational. And again, I think it's a rounding out kind of a high where I think at some point you have this scenario where, I actually think that you're going to look at a Bollinger Band looking something like this soon, where it's going to come back in and you're going to have this Bollinger Band set up like that somewhere in here, and then you're going to have a decent mean reversion tape in NASDAQ. When if I were to just take the market here, let's go back, and this is basically kind of what I'm looking for. I'm not saying it's going to be this steep, but this is that type of scenario I look for. When the Bollinger Bands are expanding out like this, and we were going higher, and then you get the rotation of the Bollinger Bands in there, that's just what I think we'll see. When I go back to here, it's going to be a much smaller because volatility is a lot smaller. But when you come and look at it, I think this is likely what we probably end up seeing. Kind of this rounding out where the Bollinger Bands are still going up with it and we start to rotate back down. Moving averages probably start stalling here. Volatility starts to stall. Let's face it, guys, it's July. We're going into the 4th of July. That is in July, right? And then you have, tariffs are finally going to have some clarity. It's like, unless everything is, I think the market's already pricing in best case scenario for tariffs. I mean, let me ask you that, Pharm. Do you think, am I wrong on that? Or do you think that that's part of where we are is the markets are pricing in best case scenario?
Yeah, I feel like, and I felt this way for a few weeks, said the exact same thing. So I think it's spot on. Like the market has really priced in all good news that there is to price in and has priced in no bad news. I mean, it just feels like everything's priced to perfection here. I mean, let's keep in mind, we are objectively overvalued at these prices. And so therefore there's some risk there if you have sort of baked in everything that's positive and nothing that's negative. So it's definitely a potential issue if we should get some kind of a catalyst.
Absolutely. And again, I talked about NASDAQ. This was a week or two ago. I talked about, 22.8. That's an area where I think you're going to start to see rotation. And that's what we're seeing. We're back to the 8-day moving average. Again, I think S&P and NASDAQ right now have hit short-term resistance. I'll go to the S&P chart. I just think that you're going to see sideways, two-way tape. I think this is good for day traders. You could take a long, you could take a short. Don't overstay your welcome on either side. You might make a higher high or a lower low and it comes back into the range. I don't expect a lot of expansion here unless it's data driven, like tomorrow's unemployment, shortened day. Yeah, maybe if we get a rally or a break off of unemployment, it could have the ability to be sustained. But I think almost everything kind of gets walked back within ranges now. And we'll take more of a look at that when we look at your charts. But that's what I see. I see more of, if you're looking for more of a trend market right now, you're looking at Dow or, God forbid, I say Russell. But I would say the Dow is obviously the one you're going to look at more. Look for your buy signals in the Dow. Remember, there's micros as well. And to me, if you like to be long, you like to ride trends, the Dow is probably your market. If you like two-way volatility, S&P and NASDAQ, I think that's what it is for a while. You see, we're coming out of overbought a little bit in RSI, which finally tells me that I think, again, to me, NASDAQ, I talked about this area as this peak Bollinger Band as a key area to watch for, and it's holding for now. It's not giving me a sell signal yet because the Bollinger Bands have not turned back inward, but the same thing for S&P. I've had these highlighted for a while. We're right in that area. S&P has not gotten as weak as the NASI, but nonetheless, rotations. They're here. I think that's what you're going to see in S&P and NASDAQ while the Dow tries to continue to grind higher. Quickly want to go over to the bond market. Jimmy brought this up this morning. I forget what pattern he calls this. I don't know what it is. Is it just a doji? I'm not a pattern guy. I don't look at them at all. But you had this market that rallied up and then closed basically unchanged for the day, and then you have an opening range high in bonds today in a upward trending market. Again, I look at this and say, bond market, don't look too much into this move. Could this be a potential top area right here? Let's take a look at what this is right here. Sure, it could be. Let's see what unemployment says tomorrow. When I look at bonds, I'm skeptical of selling the rallies right now. The talk continues to be weaker dollar, okay, which means bond goes up. And then the talk is from President Trump continuing to say, rates must go lower. We're going to replace Fed Chair Powell. Again, maybe the market's just doing the work for him, but skeptical of rates coming down quickly in terms of bond prices coming down quickly and rates going up quickly from here, unless it's data driven. And last but not least, I'll get to the gold market for a quick look here. Again, I actually was scalping gold yesterday. I talked about this morning. I'm kind of trying to find my way into a swing long. Problem is with gold, it's just like, man, it is just like, I feel like it's just a better day trading market. So I've been day trading it just ever so slightly. Dip buys come in, I get a buy signal. I'm just going to take them because I think that this market's going to grind up. I like this low in gold. I like this area to hold for now. As long as it stays above the 34-day moving average in the body of the first day of the month of the quarter, man, it's hard for me not to see gold try to keep on knocking on the door higher. Even if the dollar rallies, gold has proven it wants to go up right now. Metals, to me, are the strongest trend that remains intact coming into Q3. I just don't see any reason to fade them. If I'm a day trader out there and you're looking for, again, a market with a solid trend, it's platinum, silver, copper, gold. That's what I see. Let's go over to you and see what you've got there, Pharm.
Yeah, I mean, first things first, coming into my long setup for today on NQ, I've got that up here, sweeping out yesterday's low, Friday's low. I think it's worth watching here to see if it bases or at the open. I mean, if it can't find much traction below, this is presumed a 3-day balance until proven otherwise. So, breaking below these 580s, I think with traction, then it's a pretty bad look. But I mean, if this stays around here and can't really find any traction lower either now, or at cash open, I think it's a rotation easily back up to 670s and possibly even back up here. Just wanted to get that out first since price is sort of sticking around there. And I was looking, I mean, the 60-30s on ES have been well bid, some important spots there. So first things first. So I did start with the NASDAQ because it has been so weak. I mean, ES is like just a perfect balanced weekly profile, which we'll get to in a minute. And the NASDAQ is putting in this, what looks to be a double distribution week to the downside. No major damage, of course, right? We're still well above, much of last week's range, but there's some potential, right? And we came up, we took out last week's high, we built some volume up there. We put in an excess high. This was a spike. So a spike ends up being an excess high if we don't end up trading back into it the next day. So it was rejected. So it made things a little bit interesting. And so for the short setup today, it was basically just looking, this happened overnight, and I'm flat from this now, but, coming back up into, basically an LVN, this was, what was that, Monday's low, I suppose. And then the afternoon rally high from yesterday creates a little bit of a low volume node, short the back test of this and run it down into yesterday's low and Monday's low, which are right at the same spot, which again, to me is presumed to be the bottom of a 3-day balance until proven otherwise. Break that to the downside and continue working back through last week's range. That starts to get a little bit more interesting. And I'm not sure the ES can hold up if we see escalating weakness in NQ. And one of the things about NQ, especially with this data, right? And I kind of agree that ADP is kind of blah. It's hard to put too much weight into ADP. It's not NFP. But if the market is a little bit concerned about this data, like we've seen the last few years, even though NQ has been relatively weak, sometimes the flight to safety is the Qs right now. Not sometimes. The last 4 years, it always has been. So you could see, a little bit of Emperor Palpatine from NQ. You just never know, right? Where it's just, oh, I'm just too weak. And then, it goes unlimited power and just rips back up to these 780s, reclaims, and it's all the way back at this week's high by tomorrow or some crazy nonsense. What surprised me, zero. So I'm not short anywhere near here until we get a break lower and then in some kind of a retest or something like that. So I would be looking for longs if I wasn't chatting with you right now. So that's the NASDAQ. So again, I mean, note this profile as we compare it then to ES. And I don't know why this isn't saving where I want it to save. And honestly, at this point, you could probably disregard this 51.53 spot. I mean, look how beautiful this is. I mean, just like a perfect D balance. And so for me, it's all about, we had, the 2 daily highs, and then we've got the 2 daily lows, and they're clustered relatively close together, perfect balance. So for me, the trade setup was, if we pop these highs, we can't sustain above, then it's a short back down, ultimately targeting these daily lows. But again, these 30s have been pretty well bid, so still a little bit cautious into there. And so, does ES follow NQ, with some kind of a double distribution week down? We've got a day and a half left in the week, so there's time for that to build out some kind of respectable volume there, and that's what I'm looking for today. So I think if the Qs break down and see continuation, you're probably going to see at least range expansion on ES. Whether or not that sustains is going to be key to watch. And so, again, I'm looking for longs. If we sweep out these relatively equal daily lows, reclaim it and come back up, that's definitely on the radar today. So you have to watch both. It makes it so much harder to trade when ES and NQ are very much at odds, right? It just makes it a lot harder to trade. And so you've definitely wanted to pick on NQ to the short side since it's been relatively weak. And that's what we've done. And then ES has just been two-way trading, and you've had to be, really, really selective. So it's going to be all about, these 2 daily lows. Can sellers find traction below there and keep it below there? Because keep in mind, regardless of where this goes lower, I mean, the week is short, right? So, I mean, if we snap back after some kind of push lower and reclaim, let's say 30 anyways, 33, 34 is what I'm using kind of for today, then it's coming back up. And it's going to be the same thing that you've seen multiple times. So that's kind of the big picture here. And again, I think a lot of it depends on NQ and the huge difference in their profile shape. With the Russell, you're finding, the overnight high found basically a double top with yesterday's high at sort of some major supply from back in February. There's some strong single prints just sitting above there. So not looking to be long anywhere near there. That's a profit take for me. And then we've got some open singles from yesterday that are sort of protecting this breakout. So the singles, you've got 2 sets here, right? So technically you could come all the way down to 2192 to fill in these singles. But to me, that's a bad look. I think you want to hold last week's high. Let's call it 2200 to 2207. We could sweep out this afternoon pullback low, reclaim, and it would be okay. But it's the Russell, right? It's ultimately going to zero, so I don't press my luck with the Russell ever. So that's kind of the big picture across those 3 anyways. And I'll flip back to ES while you provide some comments anyways. Your thoughts that you have.
Yeah, every time Russell, one tick winner in the Russell, you got to cover it because it's just not going to stay there long. That's it. It's auto sell on buy it, take my way, sold.
Yeah, when in doubt, sell the Russell. Really. So we'll see, though. It would be nice to, I've got some runners or whatever. We'll see if it holds in there, can sustain these singles. So, on ES, since, I don't know if a lot of most of your viewers trade NQ or ES. Like maybe we should do a poll. You guys probably have done a poll. When volatility is like this and it's kind of low and ranges suck, I'm definitely trading NQ a little bit more. I do cover both for the Discord and the Substack, but usually trading ES. But in these environments, I'm trading NQ a little bit more. The one thing I'll add, I don't have it on my chart here. You remember us talking a few weeks back about that 518 VWAP, weekly VWAP, and the +2 standard deviation, how it was resistance. It's now support, and it's actually sitting right here at like 35, 33. And we've tapped it from above like 3 times since contract roll. I do not back adjust my chart. So if you try to put that on your chart and it doesn't look the same, that's probably why. But I'm definitely not, again, not short anywhere near these 30s. It's just, they've just been mega bid. Every dip below 62.30 has been a quick buy. This is bottom of the effective range. If you look at your 2 days and you sort of just add them together, they make kind of this nice D-shaped profile. We're coming in here to range low. So to me, I'm looking for longs in that 35 half. Could be low of night and probably is. And if NASDAQ firms up here back over yesterday's low, hopefully everybody slammed it long while I was yapping at you. But yeah, not looking to be short into these range lows.
Yeah, I mean, it's not worked, and why should it start now, especially heading into a slew of data tomorrow morning? You've got jobless claims and non-farm payrolls that we know are going to be market mover into a light trading day, into a 3.5 day weekend. So yeah, I mean, why would sellers come out on a day like today? We'll see though. I think what's interesting is that if it does take it out, it'd be a little bit of a change of character, and be ready for that as well. I mean, again, anything is possible any single day. Pharm, thank you so much. Hit the like button for my boy Pharm. This is my last day for the week. I won't be here tomorrow. Have a wonderful 4th of July. You and your family enjoy, and I will see you when I get back.
We'll see you, Adele. You take care.
All right, let's get to Tanya. Good morning, Tanya. How are you?
Good morning, Dolly. I'm good. How are you doing today?
Good. I want to start off by talking about the divergence yesterday, because this is something that you and I talk a lot about. We'll talk about them on the highs or the lows. If one makes a high, one makes a low. We're talking S&P and NASDAQ mostly, but we had a massive divergence yesterday. With the Dow versus the NASI. You may or may not have caught a little bit of me this morning talking about this with Pharm. The first day of the month, first day of the quarter, it doesn't surprise me to see divergence in a bull market when you have a market that's been as strong as the NASDAQ and S&P have been. I mean, let's face it, markets are going to be led by technology. They have been my entire career. Technology is going to continue to be the leader of the tape, up and down. But when you get into a bull market like we've been in, and all of a sudden you start to see these rotations in and out of sectors, end of the month, first day of the month is a lot of times you're going to see those strong divergences, and then they start to taper off. And so I don't hold them into too much weight as we are when they're done during those times. But yet here we are again today, although they've all turned slightly red this morning. Curious what you thought about seeing what you saw yesterday in the tape, how you traded it, and how you are going to go about trading it today.
Yeah, honestly, it was like a really big divergence yesterday. NASDAQ was down like 1% at the end of the day, and ES was down like 0.1% or something. I mean, yesterday it didn't even end on a green day. It was just crazy. So pretty tough there. I honestly, I wrote down, I made a mistake yesterday. I wrote down, even after talking to you, about shorting the weaker one, etc. And I wrote in my notepad, I was like, I'm only looking for shorts today after the London high is taken, or ES takes a London high, and I only want to short NASDAQ. And I ended up missing the short because it just didn't give me the entry, which is fine. But then it hit like the level I was looking for it to go to, and I tried to reverse along, and that didn't pan out. NASDAQ finally had some continuation lower for the rest of the day, the rest of the morning. So yeah, like you said, that will happen sometimes, like the first day of the month. So it's important just to like kind of just come in with a new day. So like each day is always different. So just kind of just shake that off and just move on to the next day, essentially. And it's pretty interesting. Like today, even we have a divergence here. ES took out that high, and NASDAQ is like ES took out previous from like Friday's high, essentially. Yeah, and NASDAQ is a lot lower. So NASDAQ already took out the previous day low, Monday's low, into this daily FEG. Like Pharm was saying, I'm not really looking to short this either at the moment, because after we take a daily level, I don't really want to look for continuations unless it's proven that it's actually following a trend. And when it's just the hardest thing to do if the ES is not in sync in that way. So we go down to the 4 hour. Yeah, we're just we took out this liquidity, this like low from that Friday. And yeah, yesterday we had that wick back up, and then today we're back into this area again. Yeah, I can't really find myself shorting too much for continuations unless the easiest shorts are like we've talked about is at the ends of the ranges, like fading rallies versus going for continuations. So rather go for looking for longs here. But essentially then it's just easier to long ES. I mean, yesterday I think it just kept disrespecting any swing highs that made a new swing low. So that's where I'm at right now. I'm not really trying to push it on like a short holiday week, really. Not especially like with yesterday not being too high. I said I'm coming in for a new day, but also I'm remembering that the divergences does not really offer me a lot of edge in the market when it's so different. Like I like to look for like a little clue, a little difference at the highs, not when one is taking out a previous daily high and the other one is taking out a previous daily low. Then I don't really know which one is gonna lead the other one, right? Because oftentimes like NASDAQ being weak can bring ES down, or it can show a reversal. So at that point, it's kind of 50-50 for me. So I'm not gonna really try to get too involved when they're too divergent. I'd rather do it like long after we sweep a low or short after we sweep a high, essentially. And right now, we're sweeping a previous wicks and daily lows, so maybe you'll find some push back up on the NASDAQ back to like 22,778 to go back above the swing high. It's definitely there's potential there if we're gonna go back into a range kind of market. If we do fail, then maybe we'll start to see some continuations for the NASDAQ. I think that would be kind of interesting, but I can't really think that it's the start of the downtrend yet. When we just had this massive push up, we can just kind of consolidate within this area and cause a lot of pain for people. Like 22, the range between like 22,645 and 22,550s, I think. We might just wick and range in that area for the next couple of days, especially before the holiday. So, yeah, and then if I look at the ES, it's just remarkable how it has all these like stacked lows. We have some equal lows, and it's just so much stronger than the NASDAQ. I mean, I think like yesterday, yeah, never even actually. What's kind of remarkable to me is that the weekly, I mean, we didn't even come back into that Sunday open yet for ES. Like you would think that we would. But on the weekly right now, I think we still have like a flat bottom wick. Yeah, we have no wick on the bottom yet for ES. So I think I would think that eventually we'd get there to that level at especially if we generated some equal lows there. Yesterday we failed to go lower there and continue with the NASDAQ, and we swept highs now, so maybe ES follows to 622 3.25, but that could just kind of, I mean, I don't know if it'll happen today. I think maybe tomorrow it could happen after we build up liquidity with these equal lows, and then maybe during the NFP announcement, like the NFP news release, it could go for that liquidity level essentially. So yeah, I'm taking it slower today, especially it's a short holiday week. It's the first week of the month. I'm never really too good at the first NFP weeks just because yeah, like you said, it's the start of the new month. We get a little bit more divergences, summer months, etc. So the day before NFP, I like to be a little cautious because we might just be generating more equal lows to take it out tomorrow instead of I want to make sure I'm not like pushing for that continuation trade, like that it has to take a certain low, etc. So I'd rather just go for like smaller trades and here and there, like see if I find anything.
Yeah, a couple things to note is that, you will get continuation trades before NFP sometimes when you have all the indexes working together. Typically, when I see divergences in the indexes and you see NASDAQ rotating, Dow breaking out to new highs, Russell trying to break out to new highs, S&P, my mentor taught me this. He's like, S&P is the center of the universe. It's going to lean more towards what NASDAQ does just because they're more involvement between the two of them. But nonetheless, it feels the tentacles of everything else. So the S&P you can expect to be a little bit tighter and choppier, going back to even like what Pharm said this morning, that mid 62.30-ish area. He said he was looking to bid it again. They were even talking about it in chat. It goes down there, like maybe you're near a low, NASDAQ's getting weaker, and then bang, they both rotate off of that low again. And so the only time I really see the continuations where you would maybe see a change of characters if they were all doing it together. But again, we've got this divergence. Russell's up again this morning. Not a big reason for S&P to go down. Maybe more reasons for NASDAQ to go down just because there have been unwinding NASDAQ and buying, Russell, and they've been buying Dow, which again, that does not mean S&P weakness. It just means S&P caught in the middle.
Yeah, I think that's a great point because if the Dow's so strong and NASDAQ is super weak, it makes sense that ES is kind of just like rotating between making a little new low and then a new swing high that takes out the high that made the swing low and just essentially making a seek and destroy type day. Honestly, I haven't really seen too much. Haven't seen it too much where it was like such a difference where like not yesterday NASDAQ was down 1%, ES was down 0.1%. It was definitely very, very like a big divergence there. So like you said, you don't really want to go for continuation trades unless the markets are in sync. So because when they're not even in sync, you can't really kind of trust which one is going to be the one that leads the battle, right?
Yeah, exactly. You don't have leadership. And when you don't have leadership, a lot of times markets, even though they might temporarily break out of range, it's like, they look around and go, all of a sudden, we're alone here, and then they'll a lot of times come back in range, which actually I'm going to talk about that with Kane today because I know that we've got Kane coming up and be curious to see what he thinks when you see this divergence because he's someone who trades NASDAQ, who's following what S&P is doing. And then when you get a divergent tape, typically, the action just gets a little bit cloudy for the NASDAQ and S&P when you've got Russell and Dow doing their thing.
Right. Yeah, it makes sense.
Any other thoughts coming into today, Tanya, as we come into today? Let's talk about it. Yesterday, we ended with you saying, look, I'm going to sell the NASDAQ. It's still the weaker one. It remains the case today. S&P or NASDAQ coming into this day before NFP?
No, I can't go with the S&P. It's being weird. It's being weird. I can't. No, I'm not trading S&P right now unless it starts to behave. The NASDAQ, I mean, the NASDAQ is just going to give you larger ranges and you might find, honestly, I'll probably just look to like take smaller trades. Like I won't be looking to be a hero if I go for a long or a short. We just hit a low in the NASDAQ, so we'll see if we end up getting like a little structure shift back up higher to those equal highs at 22,780. That wouldn't be out of the question after taking out those lows. But yeah, essentially, I mean, I wouldn't really want to trade S&P when it keeps rotating like in and out of what it wants to do. So yeah, that's what I'm going to be looking to do.
All right. Remember, everyone, Tanya is live streaming with us all day on Mondays, not all day, from 9 to 11 on Mondays, and she does her pre-market outlook with us Monday through Thursday. Tanya, my last day for this week. I want to wish you an absolutely wonderful 4th of July. I'll be out next week as well, so I'll see you when you get back.
Okay, awesome. Have a great 4th of July. Good luck and good trading, everybody.
All right, everybody. It's Wednesdays. And, we all know Wednesdays is with Kane, but I think he's getting a new nickname on the street. I talked about it a little bit last week. And we talked about how he's the tallest in the network, but he's also the one who gets hit on the most in the chat. It's pretty incredible. He's starting to build a reputation out there. Well, it's time to trade the open with Sugar Daddy Kane.
Wow, what an intro.
What an intro, man. Listen, the build up for it, it's out there. I mean, you've got a whole list of people each and every week. He's getting ready for, dates. I mean, look at, and this is, it's,
That's tickled.
every week I look at the chat. I can't take it. Kane's like, are you asking me if I'm single? Are you asking me if I'm on a date? Every time I turn it on, I'm like, what's going on, man?
Yeah. It's the market, Deli. It's the market. They're not interested in trading. They're interested in my personal life. What can I say? I live an interesting life.
Yeah, they're every week they're digging, they're peeling you back like an onion, my brother. Every week we're learning more and more about you. You're not talking about it, but yet every week you're getting drilled on it.
Yeah, that's true. Yeah, no, that is true. Yeah, I was in San Tropez at the weekend. Wow, what part of the world that is, that's for sure. So,
Oh yeah,
I'm sure.
how was San Tropez?
Yeah, it was hot though, bro. It's like 35 degrees Celsius. I don't know what that is in Fahrenheit, like maybe 100. I don't know. But yeah, my fair skin's not used to it. So, but yeah, it was fun, a lot of fun. But I'm sure you know that. I'm sure you've been. It was just a lot of fun.
I have not been there.
Oh, yeah.
It is on my bucket list. Yeah, I mean,
Then we have to
I
go.
would be the one there with the sun. Yeah, we have to go. We have to make a trip of it. I know Pax he's promoting it now too. He's like, me, you, and Kane, we're going to San Tropez. He calls me. I'm like, yeah, well, maybe it could happen. But
Yeah.
let's talk a little bit about what we got going on this week. We got markets. One of the things I wanted to talk to you about was this S&P and NASDAQ and how we've had this divergence. It's interesting because this might even almost play kind of into what more of your style anyway, because when you have the divergence and if the S&P is stronger, I just saw NASDAQ make a lower low and then you see S&P stay bid. I mean, how are you going about your trading when you see these divergences? Because I know you lean on the S&P a lot for what you're going to be doing in NASI.
Yeah, so yesterday I was actually eyeing a short out of like the 840s level on NASI. It took that high and just died straight through the open, and I did no retrace for me, which is a bit killer. And I took a small long, took an L, and then just kind of was like, yeah, this is just going to go sideways most of the day. And we got that slow grind up and those wicks down that knock everyone out. And it's just a hard spot to be in, right? Because you can't short that there because it took out the daily low, and then I'm a buyer at those levels typically, but Mondays, especially the first day of the month, it's probably just going to do nothing. And so we just got pretty bored inside the lab. Today, I'm probably a little bit more interested. We took out that prior day low on NASDAQ. ES is getting bid out of yesterday's open. It's kind of a nice setup for me. I am leaning more bullish. I wouldn't mind like another deviation at the open and then look to get long off of that, maybe. We'll see. But what is actually a little bit upsetting to me is that we're stuck between a rock and a hard place, because I would like it if ES didn't take out that Friday high, or actually just the weekly high, the current weekly high, like it took out that Monday and that Tuesday high overnight. I respect that. I know a lot of people don't respect the overnight highs and lows. They use them as targets, but especially when we take out like a overnight the high around that 3 o'clock mark, which today was 245. For me, that's typically like high of day structure. So whatever long I do take will have like a short-lived target. And if we run up into the 700 levels on NASDAQ, I will look to play a rotation back down into that, I guess, overnight low, that 8 o'clock low. So yeah, tough market to be in though. I mean, it's, especially for me, and I'll be the first to admit, and I know that you and I have spoken about this, is like the infinite bid market really doesn't suit me. So I've just been quite bored, and the trades I have taken have typically been short setups. And look, it doesn't take a miracle or a genius or a rocket scientist to know that if you were short in the market recently, you kind of got caught offside. Luckily for me, my risk has obviously kept me in the game. But yeah, it's not been the easiest market to navigate, especially for new people. I'm not the biggest bull, which is obviously no secret. So it's hard for me to just to find any excuse to get long on these infinite bid reasons, because I am expecting some sort of rotation. We're 300-ish points off the high now, roughly 250, 300. If we start to get a bigger rotation back lower, then I'll look to eye like this 21.7 and 21.8 level. But PTSD is probably going to kick in and go, well, we've been short a lot recently. So I'm trying to get on side with the market and get long until I'm wrong. And then when I'm wrong, I'll put my foot down and start to get short, because I don't know what it is, Delhi, and maybe some people are different, but I can throw on massive size in shorts. I can't throw massive size on longs. I just can't do it, because it's that slow grind for me that puts me off of trades. Where some people love it, I don't love it. I like the quick move from the high to the low. I'm out, sweet, don't care what happens in the market. Where the very slow up moves that happen, I don't have the patience to sit in those all day. So
Yeah, I mean, a couple things. Number one is I don't think the infinite bid is good for pretty much any futures trader, because we like rotation. I've never enjoyed it, and no matter how long I've been doing this, it's never easy. That's why we always say when you see the markets in a bull market, you stay long in your portfolio and you go play golf and you go to San Tropez and you do things, and you don't come in and try getting, getting yourself chopped up in on a market like that. When it comes to the size thing on the short versus the long, I totally get it. It's because it's the response, right? I mean, to me, I'm very much a trader who puts on size in areas that have great responses. I mean, lows, it's hard because when the market's making lows, because you and I aren't breakout traders, right? So we're not like buying into a high or selling into a low. So when we're coming down and the market's going down, I always found it hard to like try and find that V bottom. And it's like I'm always buying it on the right side of the V as it's going up. And it's hard to put size in that, because you're still like, is it done yet? Because look at what happened earlier this year. When we're going down, it's like the market makes a top and all of a sudden you look at it. I feel like sometimes they're more transparent and you see the selling come in, and it's like you could get in with size, and if the response is good right away, you can ride it. It's always been the case for me. It's no matter what. I mean, my best trading years, maybe take out COVID year, even though that was down initially up, like 2008 was a great year for me, other down years like 2001. And it's like, because the response when as a short-term trader is so great when you're short that you can ride a bigger position. A lot harder to do that in a grindy bull market. Like, what are you going to do? Buy this S&P 10-point break? Hey, I'm full size. Let's, put a tight stop in and let it go. Dude, if you can do that, good for you. Yeah, I mean, that's hard.
Yeah, it's hard, right? Because like my shorts, typically the moment, well, I say my shorts, just a short in general that I'm a participant in, is if I get short, I can wait for a break lower, wait for the retest, slam my stop break even, and I just let that shit run for the rest of the day. Longs, like if you would have got long yesterday off of the low, around this 11 o'clock area, and you would have put your stop at somewhere in around here, you would have got wicked. I'm almost sure of it. Like so many people I know were long, were trying to risk off, like selling off into some of these highs, go and break even, and then they just got pulled out of their position like last minute before the close. So, where shorts, look, you sell up here, which is typically where I wanted to sell yesterday. Sell, break below this, great. Break even, let this ride into the close. Okay, I didn't sell the bottom, but I sold the high, or I buy the bottom. But with longs, I just typically find that like my break even strategy, I just get break even a lot. And as much as I don't mind break even trades, they do mess you up mentally if you take too many in a row, So yeah, just tough market in general, especially with the week. Like obviously it's a new month. We've got NFP this Friday. Obviously, bonds are just straight ripping. Like, not seen that in a minute. Kind of putting the Fed in, I guess, a bit of a difficult spot. Powell said yesterday that expects some sort of rate cut. So I think that kind of says to the market that the rate cut's coming. But they didn't necessarily not like that yesterday. Maybe sold off quite aggressively after he said that. So yeah, I don't know. Tough spot. And I'm not actively looking to play this either way. I'm just trying to play it one way or the other. You know what I mean? I'm not trying to grab a massive rotation lower, and I'm not trying to ride the long to the to a new high. I'm just trying to play the middle of the range. What I will say is the infinite bid did one thing: is that the stocks I bought at the lows are all up almost 2x now, which is just
Exactly.
unheard of. It's crazy, absolutely nuts. So good time to be an investor. Good time to be a breakout trader. Bad time to be a trader that just likes the range bound markets.
Yeah, I mean, no doubt. I mean, that's exactly what it is. And then that is why there's the separation between, you know, trader and investor. And I always tell people, look at, I made a lot of money trading, but I've made money and I've turned that money into
Money into wealth.
by being a
Yeah.
good investor. Yeah, I mean, that's the difference, right? Because it's like, if you're going to come in here, you have to be able to withstand periods where the market environment is not conducive to your strategy and your style, because that is the way it is. And when it's good, you got to keep taking. And when it's not, you can only let the market take so much. Again, to back what you said, like a lot of break-even trades, they chip away at your mental capital and they wear you thin. But luckily, I know my guy Kane, he takes time off to regroup and recharge that battery, so he comes back fresh. And, I think that's what shows your growth, that maybe the younger version of Kane may not have done. He probably would have tried to grind it out, pushed it, and who knows how much he'd give back.
Yeah, exactly. Yeah. I just know when to, and again, that's something I really have learned, right? Is I had a really good start to the year. I had so far year to date, good start, little, peak in the middle again, either side of the start and the middle. It's been a bit boring, to be honest. Overall, red in those periods, but overall across the year, I'm laughing. It's not even, but it's just boring. And the mental capital is really what I'm trying to preserve right now. So, yeah, we'll see. We'll see what the day's got in store.
That's right.
You're not here next week, so yeah, you doing anything fun?
Yeah. Well, we got my buddy's jet. We're flying out to Connecticut, and we're going to play golf at the Mohegan Sun. We're staying there for a few days, and we're going to Newport, Rhode Island. Going to be on the boat. I might share a few pictures, but
yeah, thanks for the invite.
Yeah, we got
honestly.
a whole group of us every year.
I'm busy anyway,
yeah, well,
so I can't make it. Thank you, though. Really appreciate that invite that you special delivery to my house. I'm really sad I couldn't make it. So that sucks.
I'll do a selfie for you, so you'll feel like you're there, like with my arm like this.
I'm changing my number
hey,
actually,
what's up,
so
man?
I'll have to forget to send you that one. Yeah, nah. Have fun, buddy. It sounds like a blast. Are you doing anything for the 4th? I know that's obviously big there. It's not big here, so.
Yeah, I was wondering. Yeah, you guys don't do much over there for the 4th, do you? No, not much.
No,
over there
nothing at all.
in the UK. Okay. No, I got my parents coming over. I got my birthday next week, so I've got everyone coming by me, hang out, chill, birthday, and then, like I said, I'm gone. So really going to be light barbecue and chill. So again, going to be keeping it light on social as well, but. I expect the markets to be somewhat busy tomorrow and maybe even the next week. We'll see how it goes. So I'll always be 1 foot in watching so I don't come back totally cold. But I appreciate you, my brother. Glad you had a great trip. Glad to have you here today. Everybody hit the like button for my guy Kane. Also make sure to go check out what they're doing at the lab. Their group continues to grow. Just absolutely fantastic work they're doing for the trading industry. So make sure you go and check out what the lab is doing and follow my boy on Twitter. All right, Kane. I'll be talking with you in text, and I'll see you in chat. I'll see what happens in chat today. It's always exciting, but have a great day.
Appreciate you, brother, and happy 21st for the God knows how many years in a row for your birthday.
Thank you.
Ciao, ciao. Chat, how are we? How are we? Good morning, good morning. I don't even need to say it, Fanny. You liked Leo the Tigra. Hello, sir. How are you? Kane sounds like the NinjaTrader knows about our love story. Yeah. Good morning, good morning, good morning. They're bidding it out of this low. And I kind of just said that, like, we're also bidding it out of yesterday's open. We'll see. I think the Open's a really interesting spot right here. Um, we shall see. We shall see. How is everyone though? Everyone good? It's a typical. This is basically the similar setup to yesterday. Um, I was looking for some sort of short out of this area, which is just the first high inside a discount. Same, say discount, which is just 50% of this range, whatever you want to call it, what you want to call it. And then the same thing here. This high. If we get a reaction out of this high, I will short it back into the lows. I like to just play the same blueprint as always. And both of the opens have actually sold off the last 2 days. So the bulls are not present in the room with us right now. I think they're taking a break from their hard work they've been doing the last couple of weeks. So we'll see. All my eyes are on this and the current low. I'm looking to engage either here or here. This is the middle, and I don't diddle in the middle. Is Leo? Yeah, Leo. My Leo, not Leo. Orderflow Labs Leo. My Leo is taller than me. Yeah, he's actually he's 6'6". I'm 6'5". He is taller. Yeah, we didn't go for a wedding. We actually just went for a bit of letting the hair down, so to speak. But it was good. We had fun. It was a really nice time. Weather was amazing. Jessica, the trading lab is an educational group that I run. You can find more about it on my social media. I don't personally like to sell it, especially on a live stream. So you can go over there, check it out, and you can have a look. My Leo, yeah, my Leo. He is my Leo. He belongs to me. I don't know if you guys watched the Open yesterday, but my lord, lordy lord, website's a banger. Yeah, we just launched our new website. You guys should definitely check that out. And one thing I will say, the only sales that I'll ever do is I get a lot of questions and a lot of people ask me for discounts on it, on our products. And ultimately, the products are only ever going to get more expensive as we continue to evolve. And there is a sale on right now. So do with that what you will. What's bias for the day? No, I don't really have an overall bias. I want to play shorts out of the highs, or I want to play longs out of the lows. That's just typically the trader I am. I like to engage at the extremes. Okay, we touched that high. Similar to what we did yesterday. Look. Do. Mostly we went sideways a bit, but run out into the high and then lower. So I'm just kind of looking to play the same sort of thing, really. Um, we'll see, we'll see. I want to see some sort of stalling here, though. Especially now ES is below the open. I will fade this very, very much. Please. Give me the fade. Nazi's looking a little bit stronger than ES. Maybe the rotation is in. We'll see. Stopped on run up, popped along the open and chill. Why did you reduce your contract size? I'm up like 2.1-ish mil for the year right now. Like I don't really need to put my foot on the gas, especially when the market doesn't suit my conditions. Yeah, that's just me being 100% honest. Need to see a closure below that level. Yeah, I mean, look, the number's pretty skewed. I did 1.4 of it in 20 something days, like heavily day trading in January. Again, if you head over to my Twitter, go to the highlights section, you can see it. Okay, I'm gonna sell this if we get pulled back up into here. Let me put my stop in. We'll see. I don't really need a TP right now. Yesterday it did the same thing, but it didn't run me in. I just need to mute this absolute travesty. So yeah, but we could get caught in some deviation here, especially with ES taking this low again, getting bid out of the open. Tight area. I prefer to be short here, sticking to my game plan, short out of this. This will be an area where I'll look to get break even, especially if we get some sort of solid closure below the open. I'll probably try and run this into the lows and maybe just trail my stop and get stopped out of it if it decides to run. But we'll see. Let's not plan too far ahead. We've got to make sure that as I'm making sure we've got to sit through the break first. It might just run higher, a bit higher first. Do I still do anything in crypto? I've had enough of that after FTX. Yeah, I kind of bin that off in all honesty. Like I hold a lot of crypto, like spot, but yeah, rarely day trade it to be honest. And also the landscape changed a lot since I took my hiatus. I think I'm about to get stopped here. It's looking very strong on ES right now. My stop loss in the wrong place because that just ticked the high and I didn't actually get taken out. We'll leave it there. There you go. So yeah, so overall, yeah, the FTX stuff just kind of put me off. ES still below the open, NQ still above. Nothing really changes here. NQ getting bid out of the open. I think it might see ES rotate higher. It's a very nice move, especially out of this area. Creates this God. 2 seconds. I'm trying to get rid of my like this creates some sort of movement higher, replay off this area. It's like a simple break and retest, right? I would still fade it any day of the week. But yeah, right now, nothing really changing here for us. Do I hold any alts? Boys and girls, this is not a crypto stream. I love it, but no, I don't hold any alts right now. At least not the alts that you guys care about. So no hourly low, no 4 hour low. The 4 hour low, if it holds up here by 10, then obviously we'd have to play some sort of rotation higher. But we'll see. That's 10's quite a way away yet. So we've got the new 15-minute candle in about 6 minutes. So until then, we can frame some sort of rotation lower. In 6 minutes times, I need to see deviation again. And again, in about 15 minutes after that, I then need to see either finish lower or deviate higher. So we will see. We'll see. Look at that Friday low. Like I said, though, it's really upsetting that they basically look like this right now. ES swept this high and this high. NQ swept this low. You have divergence either side of the market. It's tough, eh? Tough spot. I don't like the fact that this just bid up. I would have liked to see it ran everyone out again, which then just gives me this bias. especially whilst ES is chilling below the open. But like I said, ES could rotate a little bit higher now with NQ making a push. It's probably really important to note. Let's have a look at what it's doing. Nvidia's running, so that makes sense. That makes sense. I'll play the same setup a little bit higher if we get it. The 69.25 level. But again, no closure on that. We didn't get it. So ES is still being bid. Tesla bullish, yeah. Props can be gamed. I saw you signing up for more funding companies recently. Why are you against joining an actual prop when you get scaled huge? I have one strategy and I trade one product. So I understand for a lot of people that they need a lot of capital to trade a lot of different products, but I don't really need that. And in the most unegotistical way, I have enough money to trade by myself. I'm just running the prop stuff to make it a bit more relevant to people in all transparency, because there's not many people that can just deposit 100 grand or 300 grand into a personal broker and make silly money, right? So that's why I'm doing it. But only trading Q, yeah. I think this could be a quick L again. I'm gonna keep sticking to the things I normally do, but I need to see this sell down in the next 4 minutes. Otherwise, we're cooked, chat. I like the fact that ES is respecting this mid. I don't like the fact that ES is just infinite bidding up. NQ also this spike, no spike here. This could just be a trap, but we'll see. Not going to change what we're risking here. We're risking 480 bucks. Hmm. Wouldn't mind a little spike. Spike with volume could help us here. So let's just mark out where we originally got short, just so that my own sanity can deal with that. We shall see. We shall see. What is infinite bid? It's just where the bid keeps getting pushed, right? Like people are just keep bidding the market up. No, I think it's sensible to have multiple strategies for different assets as well. I think it's sensible. I just don't need to do that. I just love the phrase, if it ain't break, don't fix it, you know? It ain't broke. What country or region are you from in the UK? I reckon I can tell your accent. Go on then, Ian. Take a guess. During the past months, do you think, yeah, it's not okay? What's infinite bid? What do you think about the pretty big divergences? Yeah, I don't really mind them too much. Okay, we're in one. Okay, we're in two. So we'll see. So what was this? Let's just calculate this loss quickly. Da, 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 da. So it's about $700. Lincolnshire, wrong. Lincolnshire. I'm not a million miles away from Lincolnshire, but I'm not like I'm not very close. Yes, just this rotation out. Oh yeah, this was silly. I just realized the time. I need to see that deviation now. So me getting stopped here is actually just completely my fault. I literally said add the 15 minutes. I need to see this high taken because it's just really, really dumb of me, in all honesty. Hearts. I'm a Hearts boy. Cornwall, Bristol, London City. I definitely don't live in London. Hertfordshire pretty close, I guess, in some way. I actually live pretty much on between like three counties. When is NinjaTrader launching their own prop firm? It's time. I don't know, you're asking the wrong guy there. I'm from Swansea. I'm definitely not. Okay, let's just wait for 10. Because right now ES is going to get back or up. I'm not from Kent either. Just relax with that guy. Don't be a bloke. What do you mean? I'm from the south, yeah. Okay, ES is now above the open range. It's time to be a buyer in ES, I guess. Kane, please advise. I literally answered your question, mate. Do you think that sticking to NQ is enough? It depends who you are and what you trade and how you trade. Yeah, there you go. There's the answer. Hearts, beds, bucks, surely. Bang on. Bang on. I live pretty much between all three of those. I obviously reside in one, but yeah, you sound like me. Good morning, Mr. Stowe. How are you? Okay, we can officially fade this now if we get it. This is really silly of me. Basically, in this short at 50, at 45, I want to see this move and then I want to see it collapse. So yeah, it's just so dumb. Too busy chatting to keep an eye on the time. Do you think in the intermediate level can stick to just NQ? I mean, yeah, of course. You just have to know when to be bored and do nothing. That's the hardest part of this job. Kane, I heard you're building a prop firm which will use NinjaTrader. Okay, well, that's a lie. Let's just distinguish that pretty fast. AJ's over here lighting fires. Top stepper sneaky. How do you know when to do nothing? If it's not super obvious when you shouldn't do nothing, then it's pretty much time to do nothing. Sorry, that made no sense. If it's not obvious when you should do something, then it's the time to do nothing. Where's the VWAP? Yeah, sorry. Sorry, chat. No VWAP from me. Oh, wrong VWAPs. There you go. Where's the overnight VWAP? Damn, they're in the same spot. What are the chances of that? NQ a value area high. Is that a sell signal from Yukon? This stop is pretty big. I'm gonna downsize on this one if we get it. It's not looking too nice at this point. I need to probably just aim for this. We'll make sure looking for our highs and lows. Any significance to that? Okay, let's have a look. At the Pico low, a 4-hour low was taken. The Pico low, a 4-hour low was taken. 4-hour low. Okay, this is obviously the old contract because there's no wicks. No 4-hour wick here. Came back. 4-hour wick. 4-hour wick. 4-hour wick. 4-hour wick. Infinite bid. Yeah. How long do I look at the VIX at all? It's funny because the way you spell VIX is it's a cold cream here, VIX. It clears your airways. Looks like it's vapor rub. But I know what you meant, and yes, I do look at the VIX. It's right here. I just look at the VIX on a higher time frame chart though. This is just under 20 is that area of, you know, lacking volatility, I guess is the answer. Oh, I lost my NQ chart. Oh, you got VIX across this pond? Okay, good. Fair enough. I don't live there, you know? How long? Oh my God, listen, Path. I'm gonna let you in on a little secret, right? Don't ask your question every single time, multiple times, because I'm just gonna ignore you. I'm just warning you about that because it's like one of my biggest pet peeves. Um, yeah. Well, how long do my trades last? Couple of minutes at this point. Looks like he's getting stopped out. How long does they normally last? Anywhere but like a good trade, anywhere from 15 minutes to 2 hours. I'm using the voice to text. Okay, Delhi. Yeah, it's just flipped day. Hard to look for longs down here though. That's the hard part. Because what's here? Nothing other than this, which you never trade into. So yeah, tough one. Tough one. VIX is made in Greensboro, North Carolina. Nice. Who asked? Did I sell around the London Open? You're okay, Path. You've been warned now. How do you sell around London Open this morning? No, I didn't. No, I literally didn't. I didn't. I didn't do anything this morning. Actually, I went to the gym and came to the charts around Asia lows. I actually caught some of this move back up, but yeah, closed it out. So, do I care that NQ took previous day low and ES did not? I care that NQ took previous day low and ES took previous day high. I'm not going to Silverstone, no. Do I cover the indicators I use? No, not really. I use the stat map, which is just a statistical level tool, marks out the statistical high and low based on previous data. I use an opening range indicator and a divergence indicator, and then an Asian range indicator. That's it. That's it. You lost 17K? How? How is it even possible to lose 17K 25 minutes into the session? I think you might have a risk problem or a size problem there, Nerman. I don't speak Spanish or whatever the language that is. Apologies so far. The long VX futures, sure, do your thing. I'm a NQ trader. So if it's asking how long I've been a trader, 10 years coming up. Well, actually, it's 10 years now. It's 10 years. Relax, grab a coffee with pecan nuts and enjoy the show. Maybe I'm allergic to nuts, Khan. How presumptuous of you. Um, yeah. Yeah, I know you're excited to learn from me. Yeah, you just don't have to ask the question repeatedly. That's the only thing I ask. Does the essence, is it good? Uh, it's the one I use and it's custom to me, so I like it. But it's again, it's completely preference to me, right? Wow, kind of rules out shorts here, boys and girls. Um, I have to be looking for some sort of long here on NQ. Um, this is tough. Tough spot to be in. Not sure I want a long here. VWAP? I don't use VWAPs. They're just on the chart. Oh. They're just on the chart for order flow purposes because I'm an order flow trader, right? I just use VWAPs. That makes me order flow trader. Come on, Kane, short it to 22,380. I'm good. It's that easy. Exactly, Sto. You first time joining you today, found you by asking ChatGPT what were some reputable live streams on YouTube. Wow, ChatGPT with the plug. Thanks, Matt. Look forward to learning. I'm only here every Wednesday, so only tune in on Wednesdays. I'm kidding. Tune in every day. There's a bunch of different people that come in every other day, every day. Trade the open. My day's just Wednesdays. Exactly. Leo's 100% right. If you ask ChatGPT who the best VWAP for the best VWAP course, it comes up with my name. And I don't even sell it anymore. It's crazy. It's yeah. Those VWAP course buyers that bought it all those many moons ago, like 3 weeks ago. Um, yeah, it's crazy. Stop smoking that battery juice, Kane. Hmm. 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 Take the generational short. I did actually. No, I didn't. I didn't short 22 to 16K. I should have. Go natural. Hmm. Yeah, you're welcome, Danny. You could also just buy the course from Stowe. If you all DM Stowe now, like if everybody goes and DM Stowe, he'll give it to you for free. His Twitter is what's his Twitter? Sto 42. Is it that? No. What is it? Sto. Oh, it's the TA Snow. Sto. What? Did you delete all your tweets? What happened here? Why do you have no tweets? Is Twitter bugging out? Oh, it's bugging out. No, you have no tweets. What? If you all go DM Stowe, right, for the course, he can just provide you it for free. He'll give you a link. Honestly, if you keep doing that, it says you have no tweets for me. But I think it might be my end. I think it might be bugging out on me, chat. Who would have guessed? Twitter, the billion-dollar company. Yeah, it's bugging out. Twitter's down by the looks of it. What course? Brenda, go ask Stowe. If you look at that Twitter I just posted in the chat, if you DM him and say, "Could I get Kane's course, please?" He'll provide you a link for it. It's completely free, and he'll provide you a link to it. It's a different account. If I just linked the completely wrong Stowe, no, I couldn't have. I just searched Stowe in my search bar, and did it recommend me a fake Stowe? Oh, no, Twitter is completely bugging for me. No, it is. This is the right Stowe. It's in the do I have the link? Yeah, here's the link. This is the Stowe. Anyway, Stowe will 100% give you it. And if he does, if he doesn't, and if he tells you it's a joke or something like that, remain firm with him. Tell him, no, you're not falling for it. Kane told me you would do this. Are there any days of the week that you're more profitable than others? The days I typically win on. But no, there's no like I can tell you now that Mondays and Fridays are my worst days. Over a period of infinite amounts of data, Mondays and Fridays are my worst days. I've had some of my biggest wins on Fridays, but I've also had some of my biggest losses on Fridays. Yeah, exactly. AWS has already got the link from Stowe. So if I've been drinking, nah, if I drink on a Saturday and a Sunday, Monday I can just turn up the money printer. Turn on the money printer. Wow, we've gone nowhere so far. Do I journal? I journal my losing trades, yeah. I don't really journal my winning trades a whole bunch. Do I trade all August? No, I typically go on holiday in August. Am I looking for sells? I'm actually just looking for something here. If we sell off, I'll probably look for buys, and if we push higher, I'll look for long. I'll look for shorts, yeah, for sells. Why can't you see Stowe 42's posts? You can still DM him, I think. You can see today's highs being taken easily. What was that? Maybe. I mean, we've retraced quite a large amount of the move. We'll see. 10 a.m. reversal? Not really, because, well, maybe. The thing I don't like is, right, let me just delete these VWAPs. They're doing my head in. We're above the VWAPs, okay? Who would have guessed? This buyback is quite some buyback. Guys, before I get anybody like super excited about some course from Stowe, and I don't know if the humor inside of me died on a lot of you, but I'm joking. I don't have a VWAP course. It's just a joke that me and the Order Flow Labs guys have. I just put the VWAPs on my chart and then claim I'm an order flow trader because they trade order flow, and I obviously do not. Yeah, I don't want to come across like a douche. So I was just trying to get everyone to DMs though. Thoughts on reversal from the 753 area. Yeah, I mean, at that point, I'm basically expecting the higher. Kev flow strat. This is where we just long this and stop below here, and we just target 2R. Oh, actually, better, yeah, we could just long this. Stop loss here. Targeting the high. I see this setup posted on Twitter like every day from various different people. Yeah. I'm obviously not going to take this. I'm just saying that it could quite easily just trend up into these highs. V shape right out. This is your buy, and then you're looking for buys in here, and the open is whatever. And yeah, the opening range is just the first 30 seconds of the day. And I'll answer the next question is how do I use the opening range? I quite literally use it as a marker of the open. That's pretty much it. I don't want one to be above, one to be below. I want them to be in sync above the open and then look for some rotation away from it or towards it, depending on where we are. We could play the manipulation levels. Yeah, maybe. We'll see. We'll see. What we do when we're bored inside the lab is we just typically play Clash Royale. That's what we do. So I don't know if anyone here plays Clash Royale, but yeah, that's basically how we do it. It's offline. What? Squad busters? Nah. It's not offline. Who lied to me? You want a quick 1v1? No, not right now. Maybe later. Wait, is the new card finally out? Okay, we get closure here. I will short. Did it come out already? Let me see. It's not out yet, but I saw the videos on it. It was pretty shitty from what it looked like anyway. More divergence. 1v1 me, I'll learn how to play. Okay. If you say so, it's more likely we take the highs. Wow. I love that. Everything's more likely. What would you have done if I have trading everything and it didn't work out? What would you have done if you, oh, sorry, I don't understand the question. Are you asking if what would I do? What would I do if trading didn't work out? Um, I would have probably just remained in my high-paying tech sales job. No, I'm kidding. I'm kidding. I'm just trying to be funny because I'm bored absolutely out of my mind. Yeah, I would have. I actually had quite a high-paying tech role, so I grew to hate it eventually. But I kind of fell into tech sales in all honesty. What tech did I sell? Mainly like cloud storage, but I was more like the managed services side of it. So it was longer sales cycles, way more money, like as in way more spend. People weren't just buying laptops from me, you know? That's what you do. Yeah. So we used to just sell like cloud solutions, tech stacks, like and then I would sell the managed services around it. So someone would come to us with a requirement, we would scope it out, and then we would manage that on their behalf if they didn't want to manage it. So that was it really. And I did that. Damn. We bidding. We bidding. I'm not in this, and I don't want to be in this right now. So yeah, we're very, very close to the overnight high. And we do have like a 90% chance of taking the overnight high, right? Yeah, I took two losses so far and had a win from London. I'm up around about $1,000 on the day right now. And down this session, I'm down like 1.4-ish right now. I'm at 1.3. So yeah. What did I take in London? I took a long out of this low. Yeah, bang. Uh, yeah, off of here. Rotation up into this. I basically just played that. It was looking very, very obvious at the time. What's my max daily loss? Depends, really. Depends on the size of the account that I'm trading, the run that I'm on. Yeah, depends. It depends. Do 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 do. Oh, sorry, chat. Burning the candle at both ends. It is I very much implore everyone to probably just walk away and not look at the market. I agree. Wholeheartedly, I agree. ES is quite literally going nowhere. We're up 4 points well, actually, from the open, we are up 6 points from the open. As he's up 100. That might be a little bit of a discrepancy there, my boys and girls. Kane 60 days, 59 loss, 1 win. Ah. Yeah, maybe Ali. I think actually it might be just 60, might be 60 losses, in the 60 days. That'd be aggressive. I haven't been on here a year and I'm only on here 1 day a week. How does that work out? Wow. Do I have my ninja stats? Yeah, the account's ever so slightly up. It's not massively up, but the um Ninja live stream basically started just after the drop, and it's been infinite bids since then, so it's kind of shitty for me. Like, I can't get in this move. It just doesn't work like that, chat. Some people can, some people can't. I can't, and I don't care admitting that. Yeah, it's just this holiday week, right? I mean, this is a good week to just go off and do anything other than trade, in my unprofessional opinion. Rules are rules. Yeah. Yeah. Honestly, I'm the first to admit, and I don't mind admitting this, that I don't like this market right now. It's not nice. But the facts are the facts. No. I don't mind the VIX being under 20. It doesn't bother me. That doesn't bother me at all. What bothers me is this. Like, this is just horrible for me. Buyers getting crushed here, sellers getting crushed here. Yeah, sure, it's a tight range, but it's just the same thing, hard time frame right now as well. Yeah, this would be valid, Russ, yeah. I'm just waiting because the 5 minute will also print in 20 seconds. And if the 5 minute prints in 20 seconds, I'll just wait for that. In full honesty. Wanted that 50-minute balance to be tapped after 10 a.m. before joining. This one. Pull down, trade higher. Would have been nice. The thing is ES was clean actually. Just played off just for the open. The open stalled, open, trade lower, expand. But again, it's not my strategy. It's hindsight for me at that point. Tried a few shorts for the pennies. Just going to overtrade. I already walk away, but today blows. Ticks add flat. Wish I had PL. Wait for the 22781. 22781. Oh, what, off of the overnight high? Yeah, maybe. We'll see. Oh. Yeah, that drive lower, that 4 hour drive lower, and then yeah. Well, I also agree. I think it's going for those highs, but we have that divergence, and I actually care about more blah blah blah. I care more about ES right now. So if we get divergence the other way, then I'll look to trade. But right now we have that already. NQ's up here, ES down here. This could just rotate, especially if this rotates. YM at the lows. Selling YM, buying NQ, ES doing nothing in the middle. Yeah. I just wait for this now and basically can't touch it before. And if this was to just close below this in the next 5 minutes, this would be my trade. Delta is showing buying pressure decreasing. Fair. Or is it showing selling pressure increasing? How can you differentiate? Tell me. Yeah. Is it? Thanks, though. Appreciate you. I can see that you're putting my VWAP course to good use. Legend. Legend. My grand debut on BDH. Got to pick off my toenails and appear on BDH. Jeez, Louise. You know what, Azad? That's a very good question. Stowe, could you please enlighten us? What does selling pressure stand for? And who are they selling to if there are no buyers? Please, give us all a little quick 101. See you later, Lenny. No, by the way, I actually think it's a really good question. Hence why I asked Stowe to tell us. The market maker is who they're selling to if no buyers. Depends on the depth of the order book. They just bid this out of here again. Bang, bang, bang. It just needs to get through this now. If it gets through this, soaring. I'm soaring. Actually, I'm not going to sing. Sorry. That's not happening. Close, though. I don't use order blocks or breakers, no. Ken Griffin also has an unlimited amount of money, okay? So don't worry about what that guy says, what they do. They buy it in the hopes to sell it to someone. They can hold it forever. Patrick Whelan's a bit of a beast at trading. I think he's found his rhythm. That's definitely for sure. I think anyone that argues that's probably a bit of a silly sausage. I don't necessarily agree with the way he does it though. Creating drama to um creating drama to make affiliate sales. I mean, fair enough. If it works, it works, but do I think the London session's easier to trade? Did we just spike that hard? Hello? Nice. Right in time for the initial balance. Ba-boom. Done shutting it down. Time to fade. My stop loss is 748 down here. Hopefully this never crosses. There's no bars down here for the rest of the day. Yeah, I mean, where did you long from, Stowe, knowing you probably somewhere down here? And then added here, got the squeeze. Look, I think there's no denying that Patrick Whelan can trade. Like, definitely has made money trading. I think that'd be silly to say that he hasn't. Yeah, there's no argument with that. Like I said, if you argue that, I think you're a bit of a silly sausage. How much is that trading proportionate to the amount of money he makes from affiliates? No, of course not. But that's okay. I had 31 Apex accounts total. No, 30, not 31. 30. Adding at 755. Yeah. Am I in a trade right now? No. No, I'm not. I think he's in Hawaii right now, hence why he's wearing Hawaiian shirts. Fucking. Ugh. Yeah. Sorry. Sneeze. Allergies. Whether one makes money from trading or not, the streamers are selling entertainment, not their trading skills. Okay, buddy. Yeah. Thank you. Listen, I just can't stand for the drama. I absolutely hate the Twitter trading space right now. Everybody's just creating drama because they've realized that drama sells. You get clicks, you get affiliate sales, and everyone and their grandmother currently has an affiliate code for every prop firm or whatever. So yeah. Did I tell Matt L? I didn't tell Matt L. I told one of the employees at My Fund of Futures that they should increase it. And my actual biggest problem, and apologies to the NinjaTrader team, my biggest problem with My Fund of Futures was that they didn't advertise their 25K sim payout. Which I think is a bit of a crookery from them. Lorianne, to answer your question, I don't have any meetups planned, but if there is, you're more than welcome to attend. Yeah. Not anymore. Apex has cleaned out a bunch of affiliates. Yeah, fair enough. Crookery. Yeah. Well, crook shot. Yeah. You think everyone should hit the like button? Me too, Jack. Me too. Should I just long and walk away? Is that how this works? Someone help me with that. How long are you trading for? 10 years. Crazy. A century. Still as clueless as the day I started. I just got lucky a bunch of times in a row and consistently over like the last 4 or 5 years. It's an absolute mystery to me, to be honest, at this point. Ten years is a century. Yeah. Or am I high as a kite right now? It's 100. Wow, not a century. No, yeah, decade. Why did I say century? That's crazy from me. Thanks for keeping me honest, chat. Um, oh, this is horrible. Century. Lol. Yeah, I've been trading a century. Yeah, that's crazy. Back to high school? I'd love to go back to school. Could like give up all my adult responsibilities, go hang out with my friends 8 hours a day. My biggest problem was if the girl liked me or not. Well, that's still a problem, I guess, but I'm just joking. It's not a problem. Play COD all day, yeah. Oh, this is horrible. It's horrible. It's not a problem. That's all short from 22,815. Yeah, because if we have enough people trading in sim, I think the way it works is that there's some algorithm somewhere that acknowledges that the sim data is the real data, and it can just send the market lower. What do I think of Blue Guardian? I'm not going into the prop firm stuff. I was just answering. Wow. That is that's a funny comment from you, to be honest. That's a funny comment from you. That's tickled me. Maybe we'll get a reaction when ES hits that previous day high. Maybe. Oh, I can't see the chat. What's going on? It's died on me. What's the question? Jeffrey, what's the question? Go long, max size, no stops. That's the only way. I think that's the worst way. You're doing a challenge or trading a standard account size, Mr. Influencer? Whoa, Mr. Influencer? What do you mean, Mr. Influencer? Whoa. Uh, am trading I'm trading a smaller account right now. Yeah, I'm not trading my full size. Does Bitcoin want auto? Oh my lord. This is very like this is trendy, but also very well delivered. Like It's just wiki in all directions. How on earth am I going to sell this? What's this? 930 still. I'll take another stab at this, and if not, we just won't touch this. They can't break above this initial balance. So, well, that sucks. Where's 10? 10 o'clock's all the way here. That's quite the short. Oh, it already spiked the high. I hit a long during London, of all things. Like, I don't know how that was even possible. But I did it. Longed Dow. Yeah, maybe we just go to the Dow. Let's have a look at YM. Oh yeah, YM's recovering. Let's just long YM chat. Well, hourly low, 15-minute low. Oh, we missed it. We missed it. Did we? No, it's still also well delivered. Oh my God, please hide them. Okay, this spike might have done us a favor, actually. They try to break this above this. Do I know the Bill Ackman and the CNBC stuff where he made 20 billion off of a credit default swap short? No. Sounds like a lot of like insider trading though. Okay, I'm gonna de-risk on this. Hopefully I can just hold this for basically zero. We'll see. Literally in the last 5 minutes, only 6 sells of around 15 contracts. Really? There's only been 6 sells. There's not been a single buy. There's not gonna be a single sell other than passive selling. Is that true? I can't believe that to be true. I quite literally refuse to believe that. Um, Stowe, is it true? Is it true? Leo, is it true that there have only been 15 contracts sold in the last 5 minutes? On NQ, yeah. Use a tick chart. I don't actually think I pay for that. Oh no, I do. No, I don't, and I don't want to because that's ridiculous. Anyway, yeah, I don't pay for that on TradingView. In the last 5 seconds, there have been hundreds of sold up here in the last 5 seconds. Interesting. So, no way. Who would have thought? Because if there was only 15 contracts sold, NQ would be at like 100K right now. Lies? Lies? Liar! It'd be more. It'd be like 1 million. they'd be pushing the order up, you know. Couldn't move without sellers. Yeah, I know. That's that's my point. 5 sets of 15. Okay, yeah, mate. Fair enough. Oh, you've got it set to 15 clips. Okay, that makes more sense. Yes. Fuck, what's my thoughts on Bill Ackman? Great guy. Amazing. Don't even know who he is, what he's done. I stay away from most of that. He's an American Bill. Oh, this guy. No, yeah. What a lovely guy. Yeah, great. Well, this is slow. He's radical. Am I sure? How do we know if you're in a trade? You'll see it. It will look like this, right? Um, on my chart, it will look like that. Let's quickly delete that. Another bot trading day in NQ according to Delta volume. Bitty is back at 108K. So you're in one now. Staying on my shorts around 6 to 7Es on ES. But you can see large icebergs on bookmap. ES takes previous day high. Now let's get filled and dump it. Is your risk to reward tool an add-on? No, it's just the short position on trading day. Chat, tell me some good jokes. Is good at, I'm not good at Clash Royale. Oh, that's the joke. That's the joke. That's funny. How about you tell us some good trades? Long NQ about 45 minutes ago. There you go. You just made 100 points. It's okay, V. It's the Chart Fanatics video. There are two bulls at the top of a hill. Oh, nice. Nice. I should have left my fuck. Fanny, look, we were ticks away. Look. Oh, no, no. Oh, I've had enough. That's it. I'm gonna go kick the dog now. Okay, here's a good joke. NQ. That's a good joke. All right, there you go. The end. What happened? And how quick was that? Oh, happened very quickly. Oh, I want to sell this. Help me find an entry. Someone. No, I'm gonna be greedy, chat. I'm gonna be greedy. I'm gonna wait. I want my good risk to reward. I'm gonna wait for this entry. I'm gonna wait for it. And it's coming around pretty quick. What's happening on? What's going on? That's it. We're going for a 9-hour trade, or I'm eating beans on toast for dinner. That's it. We're just watching this now. Take us all the way back to 10 a.m. open, please. No, I don't want to. No, I'm going to be greedy. I'm being greedy. I probably should just sell this, but that's it. Very tight stop. $200 risk to make 2 grand. I'm in. I'm in. I'm in. Watch this get run over like a steam train, and the buyers just soak all this back up. But the end, basically. What's the ES doing? Weaker. NQ. Just find some weakness somewhere. Just somewhere. The drop was bait. I fell for the bait. I'm the fish in this situation. I mean, look, this is a textbook setup for me, and I would take it every day of the week. I just hate, and I mean hate, this price action right now because this was super obvious. However, when it plays out, yeah, I it is what it is. Get rid of these. Now we have that divergence again, and now they're gonna. Big money sweep hit me. Yeah, maybe. I think that's it for me though. I have no ambition to get involved in this a whole bunch. This infinite bid is crazy. This just gets bought straight back up. Sellers getting hurt, aka me. And yeah. Look, luckily I'm actually up from London, to be honest, so it doesn't hurt anywhere near as much. But what an awful New York session. And yeah, am I shorting this? I don't know where you just were, but I just took a loss for $200. Thanks for rubbing salt into the wound. This level is I'm tilted. Brother, trust me now, I am not tilted. I'm up $800 on the day. So yeah, I wouldn't say I'm tilted. I just don't like I don't like the bid. Don't like it. Again, that's just how it is. Too busy blocking out the haters. Oh, no, CBA. Haters are your biggest fans. I've learned that the hard way. Sometimes you're the statue and sometimes you're the pigeon. Yeah, today I'm the statue. Yeah, good analogy, Batista. Good analogy. Why didn't you think we'd run London highs? I wanted to see a reaction before that. Do I use 6 p.m. or 12 p.m. as true day open? I don't use either. Just use midnight. Midnight is my opening level. The day's open is 6 p.m. I thought you were long from 22,608. No. Bonds green, Dixie green, stocks green, Bitcoin green, gold green. Yeah. I also find it difficult to place to participate. Yeah, I mean, these days you just do anything other than try and get involved. I mean, look at this. Bang. No pullback. And the small pullbacks that did happen, I got chewed up on. And it's okay. Live to fight another day. Be back here again tomorrow. Well, not here, but be back trading again tomorrow. And until then, I couldn't care what it does. We go to 30K for all I care. Well, actually, I probably would care. I would like that a lot at that point, to be honest. The market's open till 1 p.m. tomorrow, bubs. What's my biggest loss? 100, just under 100 grand. Probably like 80K, 90K. But then again, saying that, uh, at that point, I'm up good for the month already, you know. How do I bounce back? I was already on a good run. So mentally, it didn't affect me that much. If I deposited 100 grand to a broker and I lost it, I think I'd probably implode. But yeah, luckily for me, I haven't done that. Imagine this is the short that plays out after them all. Delta flipping. You're short from 814. Yeah, just under that level. Yeah, I mean, look, I'm not interested in shorts or longs up here. That's the reality. The shorts I've taken got squeezed, end of, and the long and being a longer, top longer, it's not in my bones. So yeah, not for me, Hefe. Not for me.
Kane, good morning.
Jim, how are you?
Pretty good. Jason, how are you? Oop, I think we're muted still, Jason.
Sorry, how's that?
That's okay. Yeah, it's good, man. That's good. So I think a more appropriate saying uh, from Britain would be sometimes you're the windshield, sometimes you're the bug.
It's true. That's also true. Today I'm the bug.
Yeah, happens.
Happens, yeah. I'm the bug. Yeah, it's just no secret. I don't like these just straight up, straight down markets in either direction. And this is just straight up for me. So yeah, we wash our hands, we take the humble pie and we move on. We come back
Yeah.
tomorrow.
By the way, as a broker back in the day, the biggest loss I ever saw a retail trader make in one day trading, 485,000.
Wow.
Was not pretty, man.
Did did you check in with them or what?
Every 5 minutes, because we were worried about not only a margin call, we were worried about a debit, man.
How much did he have in his account? Did he
He spent most of it.
spend all of it, didn't he? Yeah, he spent all of it. You closed it right before the potential of a debit, yeah.
Yeah.
Yeah, that's crazy. Wow. I mean,
Anyway,
look, yeah, we all have big losses, right? But yeah, that's crazy.
yeah.
That's silly. Are you guys doing anything much for the 4th of July?
I'm gonna go see my folks, mom and dad kegs. How about you guys?
I don't celebrate.
Oh,
Yeah,
that's right.
we don't do it here. What about you, Jason?
Yeah, going to some family's house, having a barbecue, the typical sort of typical thing.
That's what we do. That's what we do over here, Kane.
Just barbecues in the sun. Yeah, sounds lovely. Well,
Yeah.
I'll leave you guys to it. Wish you the best of celebrations, and I hope you will have a good weekend. And I'll be back here next week.
Yeah, and better luck to Max next race. That was a pity.
Yeah, it was. Well, I don't really care to be honest. I mean, he's done that to plenty of people in his career. So yeah.
Anyway, all right, everybody, smash that thumbs up button for Trader Kane. Have a great long weekend, Kane. I'll talk to you next week.
Ciao, ciao, ciao. Appreciate you guys.
All right, we are loading up here for the crowded market report with the one and only Jason Shapiro. Jason, how you doing, man?
I'm okay, thank you.
Pretty good. Summer treating you well so far?
Yeah, no real complaints.
Yeah, me too. They say that the heat dome is gone. It's still pretty hot down here, though.
It's been pretty hot here. It finally rained yesterday and a little bit this morning, so it cooled down a little bit, but it's been pretty scorching.
I hear you, man. I hear you. Oh, that's a good idea. I'm gonna share my screen real quick. I was kind of going through some of the COT stuff, and I just want to kind of talk to you a little bit about the U.S. dollar. I mean, the dollar is continually going down across most of the major, what they call major forex currency pairs. Um, I don't know if this is going to continue forever, or if there's going to be if there's a reason why it should continue forever. What do you think about the dollar?
I mean, we know the reason why. Everybody, is kind of super bearish on the dollar, and we know why. I think it's interesting that today we had, and the day's not over, but we had weaker employment number, which should be bearish dollar, and the dollar is actually going up today
Yeah.
after going down on the number. It's now retraced that whole move and is heading higher. So I think the tone is changing. Let's see how we finish today, but I think the tone is changing here. We're clearly overdue for a squeeze higher in the dollar here. You can see the positioning obviously there in the euro. These guys have gotten super, super long, and on a few other currencies as well. And I think we're about due for a squeeze here. And the first thing I always look for is some sort of confirmation like we're getting so far today, a bearish dollar number and bullish dollar action. So this could be the start. And tomorrow's number obviously will be even more telling. I'd like to see the number again come out weaker and the dollar rally up on the back of that. And then I think that the trade going the other way becomes very interesting.
Yeah, so it's kind of odd too. It's like non-farm payroll is coming out tomorrow morning, I think, right? Thursday. It's a half a day for the futures markets, most of them, right? We're done at 1 o'clock p.m.
Yeah.
And then you get into this holiday, so it's going to be the timing of it's interesting.
Yeah. Yeah. It's going to be a pretty slow day tomorrow, I guess. But look, today we already see it happening today. So at least to this point.
Yeah. So just to catch everybody up, we're looking at the Commitment of Traders report. I have a weekly candle chart up. I'm looking at the Euro FX market right now. The red histogram bars that are now going down are outline the commercial net positions. The blue outline the net large speculator positions, and the yellow represent the non-reporting, in other words, everybody else, net positions as well. So large specs are long, non-reporting is long, and the commercials are net negative. And these histogram bars are getting bigger in the Euro FX, suggesting maybe an overcrowded market here.
That's what it's looking like. Yeah.
Yeah. All right. So
Which I'll always say is not enough to put on a trade. It's just sort of a potential. And then what you want is the market to confirm that it's a good trade first, which, as I was saying, could be today. And by confirm, I mean, what's been driving the dollar lower? What are the things that drive it lower? And have one of those things come out and have the dollar then not go lower on it. So when that bearish news can't push dollar down anymore at a time when we know everybody is already, short the dollar, that's when a trade becomes interesting to me.
Yeah, so we'll see what happens tomorrow, and then when are they going to issue the report? Will they issue it on Thursday, or are they going to issue it? They won't issue it on Friday. It's 4th of July.
They will issue it on Monday.
Okay, so we'll have to wait to get that data point till Monday. But everybody should wait anyway and take the 4th of July off and relax. Family, friends.
There you go.
Yeah, that's a better strategy. That's the best trading strategy right there.
Yeah.
Let's shoot over. We're going to kind of bounce around a little bit. I have some notes here from last time we spoke. We talked about, I know we're going to go to lean hogs. Just it's not a market, not a retail market. A lot of folks trade. But again, we're seeing the same phenomenon here with the large specs increasingly long, the commercial net increasingly short. Although we didn't make a new watermark on the upside or the downside, it's still pretty intense.
It's pretty intense, and it's starting to drop now. That last candle was on the back of there's really one sort of fundamental report that comes out on this stuff. The Hogs and Heifers report or something like that. And ever since that report came out, the market has taken a turn for the worse. So again, does it mean that the market has to go down? No. But what this tells us is if the market does start to go down, there are going to be a lot of trapped longs. They're going to have to try and figure out how they're going to get out of those longs. And so the return to risk can be very, very good. it could be a very big move the other way if it starts, the trend changes and it starts to go, it could be very big because all those longs have to figure out how to get out of there.
That's right. If you're long a position, you immediately become a seller. If you're short, you immediately become a buyer.
Right.
All right. Well, we'll keep an eye on that one going forward. And I know it's kind of one of these markets where a lot of retail traders don't look at it, but I thought it was a good example of what we've been talking about the last few weeks.
Yeah, I mean, it works the same across all the markets, so it doesn't really matter, this process and this way of looking at things, like you say, it's just another good example. You don't have to necessarily trade this one, but it's another good example of how this kind of thing works.
Yeah. Well, let's roll over to heating oil. Heating oil, ultra low sulfur diesel, they call it these days instead of just heating oil, but that's in the contract spec. We're starting to build it. We had this crazy wild candle last week, huge sell-off, a bearish engulfing by probably every measure you could think of. We fought back a little bit this week. We didn't get to the midpoint yet of this bearish engulfing, and maybe we won't. I don't know. But it is a little bit of a fight back up this week on the weekly, and then looking at the COT, we had a kind of a we were kind of neutral for the commercials were kind of neutral, and then the last 3 weeks, boom, we've been building up this big histogram bar. Anything to see here?
Yeah, I mean, honestly, by the time this came out, and it shows the speculators, very long there, and the commercial's very short, it was too late, because you had a massive move, right? So what are you going to try and do? You're going to short it down there, 12% off highs or something like that, it's a tough trade to do, right?
Yeah.
Which I don't do. If it runs too far away from me as a turn picker, then I'm not going to take it because there's too much risk in the trade. It is going back up now, but going to be very tough for it to take out new highs, although nothing's impossible. And I get the feeling that when the new data comes out, this is probably going to have a big change too, because a lot of those longs would have been getting out, on that big move down. So it's kind of
Yeah.
a bit of a tougher read, and so therefore it's for me an avoid.
Well, it looks like a lot of the non-reporters, a lot of the small traders got stuck.
They did. They certainly did.
Well, and it's the news cycle in the Middle East those last couple of weeks has been I'll use the word caustic.
Yeah, I mean the news cycle is clearly what got everybody, long the energies during that whole thing, right?
Yep.
And then we can say, well, it's because that died down, which is why the market went down. And that's probably true, right?
Yeah.
But again, when so many people are caught long, the move can be pretty exaggerated, which it was. I mean, that was a good month move erased in a day.
Yeah. Absolutely. It was a big benchmark candle, we like to call them. At least I don't know if we like to call them that. I like to call them that, so I'm going to call it that.
Okay.
Let's go to Dr. Copper, see what's going on with Dr. Copper. It's starting to build a little bit. We got a nice kind of push up right now. We have a target wick. This is from the week of March 28th. I like to look at these target wicks just to give me a perspective of the potential here. 5.377 is, we're driving up there right now. We have a nice breakout up. And we can see the net shorts for the commercials are building and the net longs for the large specs are building on the positive side.
Building, but not at sort of max levels, right?
Right.
So again, you can use this data a lot of different ways. But for me, I wait until it's at very, very max levels before I'm looking to go the other way. So you could argue that, there's a lot more longs to be built before they get super, super long here. And if that's the case, then you could argue the market probably has some room to go. You can see back earlier in that chart, right at the top there is where, they were max long, right? We have a long way to go to get to those levels.
Yeah, that's almost 72,000 contracts. I mean, right now we're only at 29,000 contracts. So one might want to argue, well, there's room to grow. Therefore, it's time to get long here because everything's going, is building up to the big the big finale here, and we're not there yet.
if one is looking to trend follow, then that would be the argument. There's no reason for your trend following, at least on a positioning basis, to not be long here because there's a lot more room, potential room to go in positioning, which means that there is a lot more potential buying that can be done.
Yeah, but and we still have like some some outstanding business with respect to tariffs and other drivers of this market.
I mean, we certainly have some outstanding business when it comes to creating enough electricity for what is being forecasted, for this whole revolution that we are apparently living through. So, so there's that too.
I still drive a gas guzzler, Jason, to be honest with you.
Uh, yeah, I don't know that it's about gas guzzlers necessarily. I think it's probably more about, you know, places that can create electricity, which use a lot of copper.
Yeah.
The grid, right?
Yeah.
Building the grid out. We're short the grid, we're short grid here. If these billionaires want to, create an AI world, which they seem pretty intent on trying to do, they need to electrify it. And if they need to electrify it, we clearly need a lot more grid. And if we need a lot more grid, then that's going to take a lot more copper. That's the fundamental story anyway.
Well, yeah, and the AI story isn't unique to the US, right? I mean, everybody wants to jump on this bandwagon.
It is certainly not unique to the US. It's unique to the entire planet.
Yeah, I think this morning there's a Wall Street Journal article about uh, DeepSeek and China's AI initiative maybe being a little bit cheaper and just as good, and a lot of international entities are choosing to pick that as their platform of choice. It's an interesting article. We'll see how that whole AI, it's an AI war maybe, right?
It certainly looks that way, yeah.
Yeah.
So if there's an AI war, then you probably want to be long the resources that are going to fund that war. And copper would certainly seem to be one of those.
Yeah. I'm with you, man. All right, we'll keep tracking it. We'll keep tracking and see how we're doing. We did talk about the treasuries also last week.
And sorry, just as an aside to that last comment.
Yeah.
The question becomes, as a market participant, we can see that. We can see the story, right? It's on the cover of the Wall Street Journal. This is no mystery. This AI story is no mystery, right? We know that they need to build the grid. We know that copper goes into the grid. We know that. So how do we know when that story is fully discounted into the market? That's really the main question here, right? And this is supposed to help us. This positioning stuff is supposed to help us determine that. When it's fully discounted in is when everybody is already super long. Then it's fully discounted in, right?
Yeah.
I can't argue that we are there just yet.
Got it. All right. Makes sense to me for sure. Let's shoot over to interest rates. We talked about that as well. Let's start with I think you pointed out the 5-year note as being interesting. Let's see if my memory's correct. I'm going to click on click on that 5-year note, and we'll check it out. So I don't know. We've been elevated for a while. Commercials have been net long for a while. Specs net short for a while.
Yep. And it's been going up for a while, much to, I think, the surprise of people.
Yeah.
Although that's becoming less of a surprise now as we get closer and closer to the belief that that the Fed is going to cut,
It's funny because after the number this morning, CME's Fed Watch popped up a little bit for a July cut to 400 to 425 basis points, 25.3%. I know it's still small, but we were almost at zero, 3 weeks ago?
Yeah. Yeah. I think the interesting thing to me in fixed income is looking at the difference in positioning between the 5-year or the short end stuff and then the 30-year, where it's not really showing that people are so crowded short. This would imply that there is room for the 5 years or the shorter end to outperform the 30 years, which equates to a yield steepening, right? A curve steepener,
Yep.
which then I believe also makes sense in the macro picture to me, right? At some point, they're going to be cutting rates. Because if they don't, then certainly by next May, they're going to be cutting rates because, the president has promised that he will appoint only somebody who is very open to cutting rates and cutting rates aggressively, right? So if he is going to cut rates aggressively, then that would imply to me a curve steepener because the short end sticks with the Fed funds, whereas the long end will then discount in more inflation, more growth, which should be what it discounts in if we're going to cut rates aggressively. So this supports the idea of having the curve steepener on. Like I said, to build the steepener story fundamentally is one thing. But then it becomes, does everybody know this? Is it already discounted in the market? That's really what's important, right? And I think that this tells you that it's really not discounted in the market just yet.
Yeah, so I moved over to the 30-year Treasury bonds, and the rally is a little bit more conspicuous here, just a little bit. This has got wider breadth anyway than the 5-year, the 2-year, on a daily basis. But here you can see, I mean, the commercials are almost neutral. I mean,
Right.
we're 13,000 contracts. Who cares? That's nothing.
That's right. So it's neutral. This is really a neutral reading versus the 5 years, which are a pretty extended reading. So
Yes.
be long this one. I mean, be short this one, be long the 5 years and have the curve trade on and watch for, when that starts to get too crowded and then can get out of it.
Yeah.
It's one thing to trade the fundamental macro, right? I always say never go full macro, and the reason that going full macro, so to speak, is so difficult is because, so many people see it. So the market is a discounting mechanism, right? So again, just to repeat, I think for the third time, our job as market practitioners is to try, as we might, to figure out what is discounted in. Because if it's discounted in, then there's no edge to having the trade on, right? No matter what the macro is, right? So again, this helps us a lot in helping decipher what's discounted in.
Do you think some of these markets like discount more efficiently than others?
Uh, Not really. I think they all kind of act in a very similar manner over time. The dollar thing is cracking me up these days. Because back in January, we're at a point now where it's like, it's not if the dollar is going to go down. It's just a question of when the dollar is going to go down, right? We just had 6 down months in a row for the dollar, I believe for the first time ever. It was the worst 6 month start to the dollar index, um, maybe ever. But if you go back and look at where we were in January, people loved the dollar. They were super long the dollar.
Yeah.
I, and my process watching the COT and all that was shorting dollar back then. And now I'm looking to buy it. But back then I was shorting it because people were so long dollar and so short these currencies. And so that's how you can get a big move like that, right? You have people super short something like the euro, which they were back, and the pound and the Australian and the Swiss. They were short all of those things back in January. Then it started moving the other way. Now they've gone long. So they went from super short to long now, right? That's what causes a big move, clearly, right? Positioning. That's what moves the markets, money in, money out, right? So it's kind of a great example of this whole concept. And you can tell me, well, in January, you didn't know that Donald Trump was going to do this and the dollar was going to do that. And it's true. I didn't know because I don't know how to see the future, unfortunately. But what I did know was everybody was mega long dollar at that point. So the risk reward shifts to going the other way. Does it work every single time? No. But does it work when it does work? A lot of times to a very big amount. The answer is yes. And that's what we want as traders, right? We want to get into risk reward trades that are in our favor. You know, it's going to pay us out 5 or 6 and lose one and keep doing that again and again and again. We're never going to get them all right. But that's what this helps really to do.
Yeah. Yeah, just glancing back at a monthly chart, I every once in a while, I don't know. I think it's a good idea to do this every once in a while, just because, a lot of times people are just looking at shorter term time frames. And historically, there's you go back in time and you'd be surprised at price levels. At least I am sometimes. When I see these January 21 highs up here at one spot 2265 or the March 2018 highs, or even going all the way back to May 2014, it's like, all right, well, in the scheme of things over the last decade or so, versus the euro, maybe we're not too out of whack right now. So I shouldn't be too worried. Just from looking at a candle chart, and then drilling into the COT and then the dailies and the intraday, I could form an opinion right on how I want to trade it.
Yeah, I have personally found from my trading, and I've been trading a very long time, and I've done a lot of different things, and um, you make the big money in the big moves, you know. You make, as Jesse Livermore said, you make the money in the sitting, right? And I think that people can do an exercise if they're, let's say they're trading some stock or whatever, right? Um, when did you start, and they short-term trade the stock, they swing trade or whatever they do, right? Trade it for 2 or 3 days. When did you start buying that stock? What's it done since then? And how much have you caught of that move, right? I keep looking at that what's the brokerage stock again? Not to talk about other brokerage houses, but what's that the big broker the brokerage stock that everybody's trading these days?
Oh, you maybe something like Robinhood or something like that.
Hood, right?
Hood, yeah.
So you look at Hood, right? People are day trading it, people are short-term swing trading it, people are doing this and doing that. Um, the stock's gone from below 40 to 100 in the last whatever 2 months, right? How many people caught that whole move? In and out, in and out, in and out. I would bet none. You would have done a lot better just sitting on it, right? That's my bet. So to your point of looking at the longer term candles, yes, you have to have some down days when you trade longer term like that, but I believe over time you're going to end up much better. Just my personal opinion.
Yeah, no, full disclosure, I was a victim of that myself. I was in Hood and I got out way too early. But at the time I was like, oh, that's a nice trade. Okay, that's good. But now I'm like, why?
That's right. I mean, that's my point. And once you go through that, I think enough times, which I certainly did as a younger person and as a younger trader, it starts to hit home. Like, geez, if I just sit, do you know what I mean? Put in a trailing stop or however I want to handle my risk management, right?
Yeah.
Just sit. You're going to end up a lot better. And the time that I really learned that lesson was when I had a trade on. This was in the 90s, 96, I want to say, before cell phones, and really right when the internet was only just starting. And I was long something, and I had been doing a lot of shorter term trading and all that. And I was long something for whatever reason. I thought the market was going to go up, so I was long. And I went away for 3 weeks, and I went to Africa, and there was no contact. I couldn't and when I got back after 3 weeks, the market was up a ton, and I made more money in those 3 weeks than I had made in the 6 months prior going in and out and in and out. And it was only because I couldn't trade, right? If I got the trade wrong, I'm sure I would have gotten stopped out. I left a stop with my broker and that was it. But as it turned out, the trade ended up working. And of course, as soon as I heard, I sold it. And the truth is, if I had gone away for another 2, 3 weeks, I would have made more money because the market kept going up, right? So, you learn these lessons, I think, as time goes on.
So put on a trade, it goes your way, and then go on safari. Just go on safari for 30, 60 days, come back, and you'll be in good shape.
Yeah, but Safari nowadays doesn't do it anymore. There's nowhere you can go where you're not going to be in contact nowadays, right? With the
Yeah,
internet and the cell phone and all that. So,
yeah, that is true.
there's nowhere to hide anymore.
That is true. Um, yeah, no, I'm with you. Even when it's funny you say that. We'll go to that. I want to talk about the Nasdaq in a second, but um, that's a good observation. I mean, we're going to Italy again this year. We went last year. I brought my son, and there were times when the adults and the kids were in Rome. Why are we on a cell phone?
Yeah, you don't even want to get me started with that one. Being the old codger that I am, you know.
But
Yeah, you don't even want to get me started on that rant because it just shows my age. That's all it does.
no, I know, I know. I catch myself. I catch myself. So we talked about the Nasdaq and the micro Nasdaq being a little bit different in flavor last week. I did want to pull up the micro Nasdaq and ask you this question. I mean, right now, again, it's pretty close to neutral, I think, on on these bars. And if you think about the large specs being long 18,000 and it's 1/10 the size of a contract, it's kind of like equivalent to being long 1,800 contracts in the big, which seems like a nothing burger to me. Am I interpreting that right?
Yeah, this has all gone neutral here. You can see how short people were.
Yeah.
The blue line was. It's all gone. The Nasdaq's gone neutral here, which doesn't tell us that the market's going down, and it doesn't tell us that the market's going up. It just tells us that there is no longer any positioning edge to it. They're either going to chase it higher and they're going to get longer, or the market's going to go back down and they're probably going to get short again.
Yeah.
It doesn't tell us which one that is, but it tells us had we been buying it down there when people were super short, that for me at least, I would be getting out here as it's gone neutral because the edge is gone.
Yeah, and that crossover doesn't. I mean, in my simple oscillator mind, I see crossovers, I get excited, but it's not a thing, right? We have to accumulate volume one way or the other on a steady basis and get these peak bars before we have a signal from COT.
Right.
Yeah. All right, all right. We got time. Let's just squeeze in the E-mini S&P. I haven't looked at this, but let's just take a peek at it for fun. Yeah, I don't know what to make of this. I don't know that there's anything to make of it. What do you think?
No, I mean, like I said, the large stacks are still pretty short. The commercials are still pretty long.
Yeah.
This would be the place to be long rather than that NASDAQ chart to me, if you were looking to be long. Although, most likely if the market's going to go up, the NASDAQ is going to, over time, lead it up, right? But this to me tells me the S&P is a safer place to be here if you're trying to sit on a long.
Yeah. Makes sense. All right, all right. Jason Shapiro, Crowded Market Report. I'll pop your X channel in the chat. Appreciate you being here with us today on a Wednesday, as usual.
Awesome. Thanks for having me.
All right, right. Have a nice 4th of July, and we will talk to you next week. All right. All right, all right, folks. Hit that thumbs up button for Jason, by the way. We have one more extraordinary guest with us today, and that is Sterling Smith. Sterling, good
Greetings.
morning from Nebraska. How's everything going in Nebraska?
It is raining here today. In fact, we're looking at some rain noticeably over the next 3 to 5 days. It could be a rain out for all those firework fanatics here in Omaha. So it's going to have some interesting effect on our crops that we're growing out here.
Yeah, on that note, so I'll be with Mom and Dad Cags in Charlotte, and there's no little kids anymore. I mentioned to my wife, I go, should I, should I get a bunch of fireworks, throw them in the back of the truck? She's like, well, there's no little kids anymore. And I was like, well, what about me?
The fireworks industry here, frankly, it's truly amazing. If there's a parking lot, there's a fireworks tent, and you buy one, you get 5 free, get 10 free, get 20 free, however many. And it sounds around here. It's not quite legal to set them off in Omaha, but I live right on the county line, so in Sarpy County or suburban county here, it is. And there were people setting off things that sound like bombs coming from the Air Force Base last night. It is a thing around here, and it's not kids setting them off, it's grown adults.
Yeah, I know. It's funny. Down here, you're either going to trip over a fireworks stand, a gun shop, or a church. One of those three things. You're going to run in right away. So,
Well, actually, I think they're working on combining them here. We have a church down the street that's actually opening up its own coffee shop next
oh,
door,
there you go.
consolidate the enterprise here.
Yeah, that's awesome. Well, let's take a look at some of these markets. Corn keeps selling off. Let's start with that.
Right.
I just got a September daily up right now, and moving average is sloping down. A nice orderly sell off. We finally hit a bottom here. This was a multi-day bottom actually, and I'm going to use my rectangle as my guide. $4.03.5. We seem to be stuck right there.
Yeah, we got precariously close enough to $4 where I think you had a little speculative offtake and a little bit of commercial offtake simply because we got close to that big round number.
Yeah.
I was out driving yesterday and went out of town and went west of here. The corn does not look good. The corn looks amazing.
Mm.
Deep green, it's unusually tall. In fact, our crop conditions are the best that we have seen since 2018. We don't have a guarantee of a monster crop yet, but we are getting very close. Corn is going to start pollinating here starting, depending on when it was planted, from now over the next 2 weeks. Getting this rain like we're going to get today over the next few days is perfect for that. We had the acreage report that came out on Monday. And yes, we are seeing enormous acres, pretty close to a record. Will we get a record yield with that? Probably not. The USDA is still looking for a record yield, and they're at 181 on the last one. It's very hard to have huge acres and get a record yield, but again, it is conceivable with this weather that we could have a near record. If we break 180 for the January report, it will be a record yield. I can't take that off the table, but moreover, we could see the acres harvested versus planted move up a little bit simply because of the quality of the crop. So while we may or may not see a record yield, we could see some sort of record production, and we may produce as much as 1 billion bushels more of corn this year than we produced last year.
Okay, and just make sure I understand we're talking about yield, right? So the acreage being a record means maybe you have more, the density is a little bit diluted.
What happens is when you have record numbers of acres go in, you have great acres in central Illinois that produce huge amounts. You have acres in central Nebraska that don't produce as much. So to get to that huge number, you have to put more of these marginal acres in. So that works as a natural suppressant on the yields.
Okay.
So, but this weather, the stuff that's the really good stuff, the really good land, and I'm driving to Chicago on Friday, and I'll get a good look across Iowa. If this good stuff continues like this, it may very well be able to make up for some of those other marginal acres. So we're on our way to a very stout crop, and that's being reflected here in the market.
When you're driving through Iowa, you're going to get a long, long look.
I'm going to get a long look, and I just washed the car, got it all cleaned up, and I'm going to also get a lot of bug splat. One thing I would point out here, cash corn for new crop, which would be the December futures, is trading at about 380 a bushel. Right now, December corn is trading at, I'm guessing, about 423 a bushel, give or take. Is that about right?
Well, right now, SEP is trading $4.08.
And where's December? December's new crop. That's
I could add that, I think.
yeah.
Let's see if I could do it. ZCDES 25. DEC, sorry.
Yeah,
That was
there
a
you
mental
go.
typo. Let's click on that guy. We're $4. And well, look at that. I don't trust this bar. I don't trust this bar.
Okay.
So I'm going to take it
That's
back.
hitting right around about 423 though, give or take. Is that
Yeah,
about right?
it is 423 right now. Yeah.
Okay. So that's a 43-cent differential to where cash is trading. That could compress by as much as 20 cents. If we get this big booming crop and we see cash erode a little bit, maybe comes down to 375, that could be enough to pressure this lower. What you're going to need is you're going to need to see one more good rain across the Midwest uh, here in mid-July. And if we can pick up one more good rain sometime between July and August, it's going to be very hard to set this crop back as long as we avoid any derachas or anything. So we may very well, again, look to sell rallies. Don't try and sell it in the hole here. I mean, it is cheap and it's probably going to get cheaper. But if we see that confirmation of that, this market's going to wane. It's going to be heavy.
And that what do you think will happen to price then?
Price probably will hover around 4. We may get a few peaks and pops below 4, and we may end up with a situation where, okay, 396 is the bottom, 410, 415 might be your top, and we could sit there all the way, into December, depending on what we see coming out of Brazil. If we see good weather and increased acres in Brazil, we could be in a very slow, very sluggish market that could go on for an extended period. And there's techniques you can use using options and, selling strangles and things like that to maybe take advantage of some of this.
So what you're saying is if there's another good rain, hit that sell button.
You probably hit that sell button and don't try and buy it. Don't try and fight it. The trend is your friend. And clearly we're on our way to a monster crop that's going to weigh on prices. Also, what happens with the dollar here? The dollar continues to drive lower.
Yeah.
Couple of things. When currency markets get into trends, they tend to be very long-lived. Months, and months. Interest rates are the big driver of currency. If we are in fact going to be looking at a lower, at least on the short term, on the stuff from 0 to 5 years, if we're looking at lower interest rates, that's not something that's going to necessarily be supportive to the dollar. So a lot of that's baked into the cake, but how much we actually get and how it affects the back end of the curve is going to be the big driver in the dollar. But again, while we're oversold and we've been that way, it's a currency. It could lock that way for a year and a half.
Yeah, but I mean, even now we have a pretty big central bank deviation between. I just have the euro up, so between the euro and the U.S., and the euro is still just strong as possible.
Yeah, the euro remains strong. What that is one, better performance in the European equity markets. Europe is going to have to fund their military debt. They're going to have to spend more. That means they're going to be issuing bonds. You would think that would be kind of weak for a currency. Wrong answer. Interest rates have moved up a little bit. You can now hold German bonds and make money. You can hold, French bonds and make money. So that is a natural supportive thing for the euro. So in a way, this asking for more, spending by Europe on the military, it will happen. That will be one, it'll be good for their economy. This is a natural stimulus that they haven't seen in years. All of a sudden, you're going to be building tanks, armaments, you're going to be borrowing money, and that will in turn result in economic expansion. So that is one knock-on effect of the current behavior that is working to support the euro.
Oh, that totally makes sense. It totally makes sense.
Yeah.
I went back in time. I was talking to Jason too about going back in time. I went back in time and I was thinking, because, when you just look at this little small section of a chart, you're like, wow, this is way overbought. This is crazy. But then to your point, this thing trends for a long period of time. I mean, look at this, January 2021, all the way down, trend. March 2008, all the way down, trend all the way up. December 2016, all the way up. So this does trend like crazy, and we've seen higher levels.
Oh, absolutely. The euro, where it was for a lot of this, was actually pretty cheap. I mean, anything hovering around parity for the euro was a bargain.
Yeah.
I remember when it came out, seeing the euro hovering around, 115 to 125. If you're going to Europe, that's about what you should expect for an exchange rate. And that was the way it was for a long time. So are we really rallying here? or are we normalizing? And that's really the $1 million question. Because looking at your chart here, it looks like to me on the upper left up here, you had your peak
Mm-hmm.
and you turned it down for how long down here to get to this low that we put in July? How long's that time frame?
Oh, this is 2011 where my crosshair starts.
And it ends. So we're looking at a 13-year bear trend.
Yeah.
I mean, you had a classic bear market here, market working lower with little spiky rallies along the way.
Yeah.
This looks a lot more over the last, these last two look like a constructive bottom getting into place. And if we take out, those recent highs and can hold, we could very well see the euro back to where it was normalizing at, and that would mean, by its very nature, the dollar index is going to have to suffer for that.
Yeah. If this is a monthly chart, if this is a daily chart and I saw this area support, I would draw this exact same rectangle.
Mm-hmm.
Area support, resistance, resistance, because support becomes resistance, resistance becomes support. We see it all the time.
Mm-hmm.
This is just on like you said, a 15-year weekly chart, a monthly chart, and I extend that line over and I'm like, oh, I got a target.
Mm-hmm. Exactly. And it looks like to me, just looking at it, looks like a stochastic here running there at the bottom. We're probably going to get to that line, and we will probably have some sort of, setback. There will be people who will sell there who've been long.
Yeah.
Market settles in, congests a bit, and suddenly, interest rates in Europe become a little more favorable. European stocks maybe do a little bit better vis-a-vis the US, and up we go.
Yeah. Interesting. All right, all right. Well, we'll keep an eye on that. Let's just really quickly. I think I have September. Let's just talk about September beans right now. I've got. Oh, no, I'm sorry, November. Is that the front
November
month?
beans.
Yeah.
Yes,
Yeah.
that's where we want to be.
Let me go to a daily. This is too much. Okay, here we go.
Okay, beans faring a little bit better here. Normally we see corn and soybeans trade together. The one thing that came out in the acreage report is we planted fewer soybean acres, no question about it, and that inherently makes the crop a little bit tighter. So that is providing some support for the soybeans despite this most excellent corn crop. Along with that, soybean meal exports have been very good. A soybean by itself is useless. You have to process it. You get two things. You get meal, which think animal feed, dog food, etc. Soybean oil. When you see those big rail cars that say vegetable oil,
Yeah.
that's not made out of cucumbers and celery. That vegetable oil is soybean oil. And that is cooking grease. And that's also used to make biodiesel, ink, and all sorts of glue, all sorts of good stuff. So that area has been the strength that's holding up the soybeans. I think soybeans can remain well supported here. I think $10 is good for now. When we get to September, October, and we start looking at that Brazilian crop, how big is that crop going to be? Are we going to be, 138, 140 million metric tons? We are now looking at Brazil being the biggest producer of soybeans in the world. If that crop is big, well, it's a global situation, and we see any problem with exports. $10 beans probably safe at $10. Beans rallying much, I wouldn't count on it.
Where does Brazil export to?
They export to China, and that used to be 1 out of every 3 rows of soybeans in the U.S. went to China. Since our last little trade problem, Brazil has amped up their production noticeably and have plenty of capacity to increase their production. China's their number one buyer. After that, they go into Europe and any place else that needs to buy animal feed, the Philippines, places like that. So, anyone who's in South Korea, anyone who needs animal feed will be importing that. And, we'll have an excess of beans when the U.S. crop is harvested October, November, December. After that, the export supplies usually fall back, and then we have the Brazilian supplies that will be starting in March and April.
Got it. All right, let's just pick off wheat really quickly before we get into the stock index futures, because I got some questions for you on that. I got SEP wheat up on the board.
Up there we go. Says my internet connection, somebody's internet connection is unstable.
Uh-oh. It's probably
Yeah.
me.
We sound good. Nah, everything's working in here. Okay, wheat is faring a little bit better. We are looking at a big wheat crop coming, folks. The conditions have been very good. The protein levels are going to be high. There is not going to be a problem with the wheat this year in the United States. So, if we get another rally, I would probably look at trying to be short a little bit of wheat in here. The rains that we've been getting, we've seen this, across Nebraska here and parts of Kansas. When we go in to plant that winter wheat, finally, for the first time in 5 years, we're going to actually have some good conditions to put it into, as opposed to suboptimal. So that could lead to better yields next year.
All right. So why does Joe Rogan say that bread made in the US isn't really bread?
Why does Joe Rogan say anything? Okay, it's bread. It's made out of wheat. It is just like any other bread that you buy any place else. Granted, okay, the flour quality, if you buy wheat in Paris, it is going to be better. Okay, but it is in fact bread. But there's chemicals loaded into that because that's what we do with our food here. We load it with chemicals. But yes, it is bread. And fear is not a factor for me, if you remember that from Joe Rogan.
Yes. I do. I do. I get this stuff called Dave's bread. It's
Right.
Dave's whole grain.
Yeah.
It ranks high on the Yuka app. I use the Yuka app, and you kind of hit the barcode and it tells you what's in it.
Yeah. No, that is again that is the highest quality bread. If you buy the most generic low stuff, it's going to have more. It's going to have lower quality wheat. It's going to have lower quality flour when it's constructed. It's still bread. It's just not going to taste as good. Its shelf life that can vary. The reason we put chemicals in things is so we can move it, ship it, and keep
Yeah.
shelf life. That's the main thing behind putting chemicals into food.
Yeah. HOLSUM, wholesome bread. I have that. I'll have that song in bed in my head until the day I die. Oh man. All right, all right. Let's keep rolling here. Let's just talk about the equity markets. I mean, they've been on a tear, obviously. All-time high, all-time high, all-time high. Let's just pop up a daily chart here. It's just relentless. This series of higher highs and higher lows every day, at least every day since we broke out of the consolidation back here on June 23rd.
Yeah, we are seeing a very typical breakout rally here. We are breaking and we are making new record highs. We haven't really exploded. We had a couple of fairly solid days, and right now we're entering that drifting stage. We have big news tomorrow. We have the weekly jobs or the monthly jobs report. The ADP numbers came out this morning and they weren't very good. However, the reliability of the ADP numbers versus the monthly job numbers has been in a state of breakdown for a long time now,
Yeah.
so it's not that great of a leading indicator anymore. Then next week, that would be a week from what is today? Today's the 2nd.
Yep.
1 week from today, it's July 9th. It's tariff day. What will happen
Is
with all
it?
the tariffs? That's when the 90-day extension expires, July 9th, 1 week from today.
Or
What will
or
happen?
or it's when the new 90-day extension kicks
Or
in.
it's when the new extension kicks in. We did complete a trade deal with Vietnam. Anything that gets imported to Vietnam will have a 20% tariff on it. Anything we export into Vietnam will be at zero tariff, which sounds like a good deal, but I'd like to point out to everybody the annual average income in Vietnam is about $14,000 a year. So I seriously doubt you're going to go out and buy, a $100,000 Wagoneer living in Vietnam. You're not going to sell too many.
No.
So while it seems like on paper it's a deal, that actually does raise the tariff, and that will have an impact on a lot of shoes and clothing are manufactured in Vietnam. If there's any of this transshipping, which means Chinese goods move through Vietnam, now stamped as an export from Vietnam, shipped to the US, that will have a 40% tariff on it. So that is something we'll see. The market so far today has been okay with it. And, the drift, I don't think anyone's trying to be too aggressive on the short side here. We got two things going on. One, we got a jobs report tomorrow. Also, tomorrow's a half day and it's the 4th of July weekend. And we have, the July 9th business sitting right out there.
Yeah.
So this this looks more like drift in here. We'll see where we are on July 9th. If we extend it another 90 days, we'll see just how the
Yeah.
market reacts to it. And we'll also start thinking about that July Fed meeting and do we get that elusive rate cut?
Interesting. I did a I was curious. All right, where did we open January 2nd, first day of the calendar year, and then where did we close in the mini S&P on the last day of the second quarter or the first half of the year? And we're up only 5.16%. I know we had that huge sell-off that freaked everybody out. Got all that back, but at the end of the day, for the first half, right, you're reporting your ROI and your S&P fund, 5.16%. It'll be a little different in the cash market. I was just looking at the futures market, but this is on track to be a normal year for the equity market.
That seems normal. And actually, if we look, when you look at the futures, you have to balance in that premium and fair value.
Yeah.
If you look at cash, I don't think it's 5%. I think it might be more like about 3 plus dividends, so maybe about 4%. So this is turning out to be a very, very normal average year with actually above average volatility. I mean, we had the big swoon and we shook it off and recovered, and now we're finally year over year starting to show some signs of making money. Now, the previous guest was talking about, yields, the yield curve, and a steepener. And I do agree with this that when the Fed cuts rates, it's going to be more of a yield steepener, meaning the short term, the 0 to 5, is going to come in. Now, what happens to the tens and further out, which drive mortgage rates? I'm not so sure you're going to get much of a change there. I think the market driven rates are probably not going to be following till we get some confirmation on how does inflation really look and what's going to go on with the tariffs. And we have this tug of war between the Fed and the administration. The Fed, Jerome Powell came out and said, until I know what the tariffs are going to be and how this is going to work, just like every other part of the economy, you're a bit handcuffed. You don't know where you're going to be. It's very hard to make a business plan. So we've created this confusion, which eventually, if the market gets a little fat and a little sluggish in here, could lead to, a reasonable sell-off.
Yeah, the other thing is CapEx, right? So I've got a bunch of CapEx in my pocket. Do I want to
Mhm.
start spending it now with the uncertainty, or do I want to just wait for 6 months to see where this all settles out?
Well, it's pretty simple. You have uncertainty and you don't know how this is going to work out. You don't know how this is going to play. So you can make 4% for putting your money in a money market fund with your hands in your pockets.
Yeah.
Okay. That's not a terribly tough decision in most cases. And, well, most of the CapEx is going into, things like data centers, things like that. Do I really want to go build a new plant in this environment when I could find myself, having a tariff, having another situation? No, everyone's kind of just looking at each other and everyone's thinking the same thing. And when everyone's thinking the same thing, no one is thinking. So we're kind of in a weird spot here.
Yeah, not only that, I mean, like you mentioned, I mean, we have a holiday that's going to take up a day and a half. We've got it's July 9th, right around the corner, so there's a weekend in the middle of it. By the way, who Joe says go buy some fireworks. All right, so maybe I'll get some fireworks. And so that between now and the 9th, there's not going to be any substantive deals made.
Yeah, and something to keep in mind about this, the way the 4th of July falls, we get a half a day on Thursday, we're off Friday. Normally, this would be vacation time for me, and I would be leaving the country, and so would a lot of other people, and going on extended vacation simply because of the way the holiday falls.
Yeah.
So that's something that may affect trading volumes a little bit. We'll just have to see. And, again, we're all very skeptical about this July 9th. That's what everybody's thinking. So maybe he comes in and says, yeah, well, those are the tariffs, and you're going to have them, and you didn't want to make a deal? Too bad. And we could go through a period of, 15 days of extreme volatility before there's a new extension.
Yeah.
That's a possibility that, maybe it's a 30 to 1, but if I could get 30 to 1 easy odds on that happening, that's worth a little bit of a bet because that's one outcome no one's talking about that could very well happen.
Yeah, but I mean, we are, the folks on Capitol Hill are elbows to alligators in the big beautiful bill right now, right? So
Yes.
I don't know what the status is as of now. I know that the House Rules Committee pushed it through. It's probably, in the sausage making process right now. I don't know, but that's got to take time, right? That's got to take senior administration people's time to be making the phone calls and trying to influence the right outcome of the vote, as opposed to taking time to deal with these tariff deals.
Well, I think it's probably two completely different departments. And
Well,
as far as the tariffs, the infrastructure needs to be in place to put it on. Trump doesn't need congressional approval to do this. He can say it, decree it, and it is there, at least for the time being. So, especially with this recent Supreme Court ruling, you can get staffers to go try and, you look at those 15 representatives who may be on the bubble here, trying to make sure they get the vote or getting whatever language they want to try and change this. Are we going to see any substantive changes in the bill? We'll see, but there will probably be carve outs and favors handed to those who hold out. That would be the most likely outcome, I would think, a little pork barrel action.
yeah, I hear you. I do hear you, but I'm thinking there's some micromanagers involved in this administration. Just saying.
Oh, I'm sure there are. Aren't there micromanagers anyway? Everywhere, isn't that the new American way?
I don't know, I guess. But by the way, Ferriari says furniture too. I think he's referring to Vietnam exports.
Right. Yes. Yes. And they are a massive exporter to the world. And particularly, they supply our favorite Swedish maker of furniture with large amounts of things.
IKEA.
IKEA.
Why can't you buy? Literally, my wife ordered a new couch like 2 weeks ago, and we get a notice saying, "Well, you're gonna get it in August." I'm like, really?
Well,
Why?
why can't we have just-in-time delivery for furniture? Because we don't move furniture as much in mass as you might think. I mean, we have the Nebraska Furniture Mart here. The largest furniture stores in the world. One is right here in Omaha for square feet. The other one is the Nebraska Furniture Mart with our embassy down in Dallas, Texas. Largest furniture stores in the world. If you go in there and you need something, it can take 6 months because it's often bespoke built. But if you think about it, how many sofas do you really buy in your life? I think I've bought four my whole life. I bought more cars than sofas.
Oh, yeah, I'm doing the math in my head. I think you're right. I think you're right. Very few.
Yeah,
Very
yeah.
few.
So while it's a common thing and you see the big store, you really you don't sell that many sofas because people don't really buy that many
Yeah.
sofas. So
Yeah. Well, anyway, whatever. I guess I'll wait till August. I could wait. We had the old one.
hey, August isn't too bad. We bought a chair here when we moved, and it took 11 months to get the chair.
Yeah. Wow. In any event, so refresh my memory. What are you doing for the 4th of July weekend?
Well, going to Chicago to see the in-laws.
Oh, it's lovely.
A lovely experience driving across Iowa.
Yeah, I only have a 3 hour ride to 3.5 hour ride to Charlotte. So I'll get
Yeah,
to see mom and dad Cags, my brother. We'll go out on the boat and do all that.
oh, that sounds good. That sounds good. But
Yeah.
yeah, driving here to the northwest suburbs, depending on traffic, 6 to 7 hours, which why don't you fly? Takes an hour to get to the airport, takes an hour to get to O'Hare, then it takes 3 hours to get the rent a car. It's like an hour quicker to fly than it is to drive to some parts of the Chicago area.
I love the way you think. I've made this argument to Mrs. Keggs 100 times, and I always lose the argument, but absolutely. It's like, what's your round trip? Leave the door, walk in the other door. That's the
Yeah.
time you got to
Yeah,
measure.
exactly. So for to save, an hour maybe flying, versus paying $450 for a rent-a-car in Chicago, and then a couple $100 on airline tickets versus, four tanks of gas. And
Yeah.
this way, there's a Portillo's hot dog in Davenport, Iowa. We can grab some hot dogs on the way.
There you go. Can't go wrong with Portillo's.
Oh yeah.
Anyway, well, thanks for spending this afternoon with me. Appreciate you as usual. Looking forward to the next time we get to chat, and you have a safe travel.
Absolutely. And everyone have a good 4th of July weekend. And remember, don't be Darwin's example for fireworks.
No. All right, Chad, thank you for being here. A great morning so far. Remember, we're going to be back at 2:30 this afternoon, East Coast time. Me and Shai are going to do a hot commodities report, and then Order Flow Labs will be in the house trading the close as usual. Also, remember, tomorrow is a half a day for most of the futures markets. Most of them close at 1 p.m. East Coast time, so remember that. But we will be broadcasting in the morning Thursday. So hopefully we will see you in a couple of hours. Enjoy yourself. Have a great lunch. Relax. Talk to you soon.